Recording in progress. Recording stopped.
What's going on, guys? What is up? What is up? What is up? Welcome, family. If you guys can hear my voice loud and clear, go ahead and drop a 3 in the Chizzy chat for your boy. If you guys can hear me loud and clear, go ahead and drop a 3, family, because we are live right now. And man, it feels great to be back streaming with my family that's in the building with me tonight, family. Go ahead and drop those 3s. Let me make sure that everything is good to go. Make sure that you guys can hear me. Make sure that you guys can see my beautiful face, because we about to drop some bangers, man. You know, if I'm coming back, right, from not streaming for almost a week and a half to 2 weeks, it damn near feels like it's been forever, right? But we're back. You know, I'm back, and I'm excited, family, to be back with every single one of y'all to provide you guys with massive value. And, man, do we have a lot to talk about tonight, because, wow, it seems like as soon as I left on vacation, family, this whole freaking world went upside down, right? We're talking about, you know, the Bank of England over there, you know, and you know, them implementing some crazy policies that completely destroyed the pound, right? From, you know, now we have even like the United Nations over here trying to pressure central banks to stop raising rates. Man, there has been a lot going on, family, over the past few weeks, or over the past week and a half, that we have to get caught up on, right? Because you guys know us. If you're listening to me, if you guys watch any of my streams, you guys know I'm very big on the news, on the data, on the fundamentals, on the sentiment, right? That is what's ultimately giving me my overall bias in the market. And then from that, I'm able to create, you know, opportunities from the technical perspective by just simply aligning them both, right? So, you know, we do have a lot to talk about, guys, and I'm excited, though. Like I said, I know I said I'm excited like 4 or 5 times, but it's so true, man. I'm super excited to be back with y'all, and I will not be taking another week off for a while, right? Because now it's time to lock back in. It's time to provide you guys with massive value and just to continually help you guys get to the next level overall, family. So appreciate every single one of you guys for tuning in. As you guys are tuning in, family, you guys know this is a newer channel, right? So if you guys can do me one solid, do me one favor, go ahead and smash that like button one time, because it is going to just help this channel and this video, guys, go ahead and get spread out to a lot of, much broader audience. The more likes that we get, the more engagement that we see, the more comments, the more shares, all that stuff, guys, YouTube takes into consideration, and it uses that to actually decide if they want to actually push our content out to a much broader audience, right? So every single like matters, every single comment matters, every single share, and it definitely is something that I'm appreciative of you guys for, and I want to thank you guys ahead of time for those guys that actually decide to do that, right? I mean, it is free, right? It is free to go ahead and just show some love and like the video, family. So, but we're gonna go ahead and give it, guys, about 3 more minutes. 3 more minutes. We're gonna go ahead and give it, and then we'll get started, guys, as soon as these next 3 minutes is up, right? In the meantime, in between time, go ahead and drop your locations in the chat. Go ahead and drop your locations in the chat, right? And then yeah, we'll give it another 3 minutes, family. We'll get this thing started. Let's get it. Your boy's back, and I'm super excited, guys. What's up? What's up? Yes. Let me go ahead and start turning this music down a little bit, family. Let's go, family. Go ahead and drop your locations in the chat if you guys can hear me loud and clear. Super excited to be here with every single one of you guys today, as usual. Because, man, it does feel absolutely amazing to be back, family, be able to come on here and provide you guys with some value that can ultimately really just help you guys get closer to your ultimate goals that you guys have created for yourself today, family. But let's see who we got in the chat, man. You guys are on fire today. Super excited to be back with every single one of y'all. I see we got the guy Cody in the building. Shout out to my guy Cody. I appreciate you, bro, out there or out here in Raleigh with me. Right, I'm over here in Raleigh as well. Right, we got Colombo, Sri Lanka in the building, Jamaica, Savage Land, USA, Sturgis, Michigan. We got Canada in the building, Grenada, Vegas, Greensboro, Alabama, Atlanta, California in the building, Detroit, New Zealand, the boot in the house, New Jersey, Bahamas, Chicago, Jamaica, Chicago, Cincinnati, Raleigh in the building, Boston, Massachusetts on the check-in. We got Nigeria in the building. What is up? Vermont, what is up? I see you, Kyle, in the building with us today. Right, Charlotte in the house. I see you guys liking the instrumentals. Yeah, those instrumentals definitely were getting me ready to go to the booth right after this session. I'm not gonna lie to y'all. All right, I can't rap. I'm not gonna say I can't rap, because if I put my mind to it, I can create a platinum selling song. Right, so just putting that out there. Right, but yeah, big shout out to every single one of you guys that's tuning in with me tonight. Super excited to be here, guys. We are live on the Profit Society channel, so please make sure to go ahead and subscribe to this channel, because we will be going live consistently on this channel, guys, moving forward, right? So that we can actually go ahead and, not just myself, but, me and my partners, me and my fellow educators, we're all able to come on here, guys, and really give you guys massive value, right? A ton of value, a ton of content that's really should help you guys get to the next level. Because trading, guys, is definitely a process, right? I'm pretty sure a lot of you guys are very well familiar with how much of a process it is. And we just want to come on here, guys, and give you the as much information as possible that can, again, bring a lot of clarity into the game for y'all, right? So let's see who else we got. We got Stockton, California. What is up? Right, we got Bronx, New York, Dallas, Nigeria, New Jersey, Bay Area, Baltimore, LA, Ghana, New Zealand, Northridge, California. What is going on? Invited by the homie 20 Pip. Big shout out to that boy 20 Pip for inviting Isaiah. What's going on, Isaiah? Welcome to the family. Glad to have you here. Right, and let's see what else we got here, guys. Teach be laying down bars all night with us. What you mean? Yeah, right. We do be providing some value, right? Let's go ahead and get into this, guys. Right, because like I said, man, we had a lot of stuff that has occurred over the past few weeks. And we also have some stuff that's happening this week as well, right? Some data that's getting released, guys, that could definitely shake up the markets. So let's just take a quick second to take a look at the calendar for this week. Try to figure out which ones are going to be the most important news releases that we have to pay attention to. And then try to create some type of a bias, right? Or a sentiment off of what we currently are looking at. And trying to combine that with what the most recent data, the most recent news that has been really shaking the markets, right? We're going to try to combine all of that, guys, to just get, at least some type of an idea as to what these currencies can ultimately do. Right now, if this is your first time, guys, really looking into or trying to understand fundamental and sentimental analysis, I really, really cannot stress enough how important this stuff really is, right? Because when we're talking about what truly is causing these markets to move, right? What's truly causing these currencies to gain and lose strength, right? We have to understand, guys, that that's coming from based off data, right? It's based off the fundamental data, and then more so based off the sentiment overall regarding the overall markets as a whole, right? Because when we're talking about if the dollar is going to gain strength, if the pound or the euro is going to gain strength, right? We really have to start to look at the information, guys, that, these central banks give us, right? We have to start to look at, a lot of these things that, these economies are dealing with, right? Because that's really what's going to tell us overall currency strength. And then when we figure out what currency strength can do from an individual perspective, it can truly help us out as well while we're actually going ahead and doing what we do, right? So super excited to go ahead and break this stuff down for you guys as well. Big shout out to our newest subscriber, Jao. What's going on? Shout out to you for subscribing to the family, right? Hopefully we're able to provide you with massive value in today's stream, right? So let's go ahead and see what we got here, guys. So we did actually have yesterday some very interesting data, guys, and in my opinion actually did threw a wrench out there with what we were expecting, right? Because right now, guys, what are the current things that what are the main things that we're dealing with from an economical standpoint, right, in this world? We're dealing with high inflation across the board. We're dealing with central banks trying to fight this high inflation by raising interest rates, by becoming hawkish, right? And they've been raising rates consistently, guys, pretty aggressively, right, for the past 6 to 12 months now, right? And something actually just happened yesterday with the Bank of Australia, the Reserve Bank of Australia, guys, that is something that I actually talked to you guys about a few weeks ago, right? And we'll actually bring that up as well, right? Because a few weeks ago, guys, I actually mentioned to you guys, especially in my Telegram chat, that, yeah, the dollar has been massively bullish, but it's getting to a point, guys, where this dollar strength that we're experiencing, it's going to get to a point where it has to slow down, right? Because now we're talking about this dollar strength impacting global trade as a whole, right? We're talking about now countries, right, that are probably going to have to default on U.S. debt, all because they can't even afford it now, right? Because of how strong the dollar is and how devalued their currency is now for the dollar, right? I mean, think about it, guys, right? Last year, let's actually look at this, right? And let's just use this as an example. We'll look at the Euro USD, right? Very simple. And let's just go strictly to last year, right? Last October, right? So last October, right, 1 euro was equivalent, or $1 USD, guys, was equivalent to €1.15, right? So now, because of what actually has happened, guys, over the past 12 months, with the dollar just going through a crazy bullish run, because just the demand for the dollar went through the roof, everybody trying to find that safe haven. Right now, 1 euro is equivalent to $1 US, right? Where in the past, right, 1 euro was, I mean, technically what, a dollar? I mean, 1 euro 15 cents. I'm not even sure how to say cents over there, but you guys get what I'm saying, right? It's now completely at a 1-to-1, right? So now it's costing a lot of these countries, a lot of these, big time corporations, guys, even more to purchase the same amount of quantity of product that they're normally purchasing, right? That's not going to help global trade whatsoever, right? So these are things, guys, that I spoke to you guys about a few weeks ago. And now, this past week, we're getting articles from the UN, the United Nations, telling central banks to start lowering rates because it's going to get bad, right? Because we're possibly going to really be sent into a global depression if we do continue to, I mean, if they keep on raising rates, everybody's keep on raising rates the way it's going. Yeah, guys, we're not just now considering a recession. We know we're in a recession. I don't care what definition they give you, right? But now we're considering a global depression, right? If they continue to do that. And now is getting to a point where these central banks might be influenced to a point where they have to change their sentiment, where they have to start to backtrack, right? But another thing that we've been speaking about, tremendously, guys, is the main objectives that these central banks have, right? For one is to have stable prices, right? But for two is also to keep low unemployment, right? But in order for them to accomplish both of those goals, they got to kind of like contradict each other. Right, so yeah, if the Federal Reserve does decide to do a U-turn and they do decide to lower rates again, right, going from a hawkish to more of a dovish standpoint, we have to understand what that's truly going to do, right? Yeah, it's going to prop up the markets again. Yeah, we're going to start to see, a lot of these asset classes like the stock market, crypto markets. Yeah, we're going to see those rebound, right, if they do start to U-turn. But what we're also going to start to experience is high inflation again. Right, so again, it's a very tough job, guys, that these central banks have, right? And I say all that to say this, right? Because now, not only are we getting all this pressure from, entities like the United Nations to try to stop these things, right? But we finally seen a central bank, right, yesterday with the RBA, right, the Reserve Bank of Australia, where they actually did start to, quote unquote, reverse course. Right, because they were actually expecting to raise rates, guys, around 50 basis points, right? But instead, they only raised it around 25 basis points, right, which is lower. Okay, so because of that news and because of, this data coming out the way that it did, I mean, the Australian dollar itself, guys, I mean, technically we've just been going sideways a lot, but we did initially see, right, a lot of volatility into the market because of that. But now the whole question that I have here, guys, right, is that what is the Bank of Australia really trying to do now? What is their main objective? Right, because we know for the U.S., as of right now, the U.S.'s main objective is really just to try to combat this inflation. Right, so they're going to continue to plan on raising rates no matter what, at least for right now, based off the information that we have, right? They're going to continue to raise rates. But now the Reserve Bank of Australia they're actually changing course. And yeah, they still technically raised rates, but at much slower pace. Right? So we have to understand, guys, that now we could start to see a shift really start to occur, right, for a lot of these central banks. And if we do start to see the shift, then our sentiment is also going to shift as well in how we approach these markets. Is this making sense, family? Drop some threes in the chat, right? And if you're newer to the call, you'll start to get it eventually, right? Because really understanding economics and trying to correlate all this stuff to the charts is definitely not something that's just going to be a walk in the park. But once you understand it, it's an absolute game changer, right? So again, as of right now, guys, right, we are starting to see evidence or clues, right? Whether it's from what the Bank of Australia did, right? Or whether it's from, the rumors or the pressure, right? The public pressure and the private pressure that these central banks are going to have. Right, we could realistically start to see a shift in pretty much policy, right, and monetary policy overall. And if we do start to see the shift, then we also need to understand, guys, how this is going to affect our currencies. All right, so again, a lot has happened. There's going to be a lot that continues to happen, right, and it's going to be very interesting to see overall, guys, how this thing ends up truly playing out, right, because like I said, these markets, guys, are absolutely predictable, but it's only predictable when you understand exactly what the sentiment truly is, right? So, again, that was just a very interesting move here, guys, by the RBA. Instead of raising it 50, they raised it 0.25, right? Which, again, is pretty much going against the aggressive approach that everybody has been having, except for, like, the Bank of Japan, right? So that's interesting to see, guys, right? Now, going into today, we also did get, the Reserve Bank of New Zealand, who also had their interest rate decision. Right now, they actually stayed the course. Right, the Bank of New Zealand, guys, they actually did. They were expecting to raise rates 50 basis points, and they actually did end up raising rates 50 basis points. Right, so they're still very much, following the path that they had created. Right, sticking with this 50 basis point rate hike, and we can also see, guys, how the New Zealand pretty much reacted to that. Right, we've seen an initial very strong spike up, right, off of that data, right? And I mean, that should be expected overall, right? If a central bank is raising interest rates, then we have to assume that that currency could also be gaining strength. Now, obviously, that doesn't mean that we want to just jump in and say, oh man, Abel said the New Zealand raised rates, let's just start buying the New Zealand dollar. No, it's not like that, right? You still have to correlate and compare, right, the strength of the other currencies too, right? But understand, typically, guys, when we have a central bank that is planning to raise rates, that is typically going to bring strength to that currency. Okay? So, very interesting thing here, right? At least they were able to stay on track. They didn't really shake the markets overall or do something a little bit differently than was expected, like, Australia did, which is kind of interesting because they're pretty much like cousins, right? Australian dollar and New Zealand dollar. But that's interesting, right? Again, I really don't know. I truly believe that at least for the Fed over here in the U.S., they're going to continue their path. But again, there is a lot that's happening, guys, right? And that public pressure, that private pressure as well, is also something that can really cause a shift overall in sentiment, right? So that's very interesting. So these are just a few things, guys, that happened over the past couple days. Now let's go ahead and keep moving forward, guys, with the actual calendar. So we do have non-farm payrolls, guys, at the end of the week, right? NFP. We also have the unemployment rate that's getting released, right? Obviously, jobs numbers is something that's very important to measure the strength of our economy as a whole. And you can also really use job numbers to also sort of gauge, inflation, right? Or CPI data, right? So right now, we're definitely paying attention to how these jobs reports or how these job numbers definitely come out, because this can also be something, guys, that does end up causing, this central bank, or at least for this one, the Fed, the Federal Reserve, to actually change course as well, right? Like if we start to see unemployment, guys, really start to tick up, if this thing starts to come up to closer to that 4 or 5%, then yeah, again, the Fed is probably going to want to change course much sooner, because that's what they don't want to see, right? They don't want to see unemployment start to go crazy, because that's just not going to do well for anybody, right? Now, again, if we want to combat inflation, unfortunately, we do have to see an uptick in unemployment. Like that's one of the ways that we can predict it or expect it to. But overall, guys, again, I don't think they're going to let unemployment guys get too crazy before they finally start to change course, right? Because that's like the one thing that they've been relying on for a while now, right, is that the U.S. still has a very low unemployment rate, right? But the moment that that does change, and the moment we start to see that unemployment rate go higher and higher and higher, they will eventually act and they will change sentiment. And once the sentiment changes, then we need to be able to change as well and adjust ourselves, guys, as Forex traders, right? So overall, though, those are the main things, guys. Just pay attention for the rest of the week, because we do have, at the end of the week, that non-farm payroll event that is coming out, right? So that's something to definitely be aware of. Now, let's go ahead and take a look at the markets, guys, and see what the hell has happened over the past few days, right? And see what we've been going on, or see what's been happening, guys, here for the dollar as a whole, right? You guys know, or at least for those of you guys that have been following me, you guys know I love to analyze the dollar itself. It's just a very, in my opinion, it's like a cheat code, right? If you could figure out what the dollar is going to do from a sentiment, from a technical, from a fund, from every perspective, I mean, it just makes it so much easier for you to really identify how to trade Euro USD, right? Or even gold, or any of these pairs that end or begin in USD, right? It's so easy to trade when you understand what the dollar as a whole is going to do, right? So looking at the dollar as a whole, guys, let's see actually what's been happening from a weekly perspective, all right? Because obviously we have been extremely bullish for some time now, but for right now, guys, it seems like we are in this period of correction, right? And we are starting to see the dollar absolutely lose strength, right? In fact, I mean, we are in our second bearish week overall here for the dollar, right? Now, again, yeah, we are seeing this pullback in the dollar, guys, but has this happened before in the past? It has, right? We've actually had pullbacks for a couple weeks here numerous times in the past, right? So that itself did not really change the sentiment or change the overall bias, because the sentiment was still the same, right? And as of right now, guys, for the Fed, even though I'm telling you guys to start considering that a shift may occur, for right now in present time, sentiment still is overall the same. Okay, the moment that we will shift our sentiment from the dollar is the moment that we see the Federal Reserve start to lower rates again, right? Or become less aggressive with raising rates. Okay, that is what's going to cause a shift. That's what I want to see, right, in order for me to really change my bias. So overall, we're still very much bullish this, right? And I say that because, yeah, we're in a period of correction now, but do not lose sight of what the overall objective still is, right, of the overall bias and what the overall bias still is, right? The dollar has been so dominant, guys, because everybody's been running towards safe havens, right? Everybody's looking to protect their capital, right? And in order for everybody to do that, right, they have to liquidate their stocks, liquidate their cryptos, right? Liquidate, a lot of these commodities, right? Liquidate their assets and convert it into dollar, or go ahead and invest into government bonds, right? Which again is also another thing that's considered as a safe haven play, right? So that's what we're seeing. Anytime we see the actual dollar correct, right, that means that people are now starting to use their dollars, and they feel like these riskier assets are at a discounted price point enough for them to actually go ahead and get it, right? So how far now can we expect this dollar to really go ahead and go towards? Well, one area that I'm going to be keeping my eyes on, guys, just looking at this whole move, right, it's probably going to be right back down to this level over here, right? I'm really interested to see, guys, how the market does react once we are able to see the dollar come back down to around this 106, 107 level, right? That's the area that I'm very interested in, guys, for the dollar here, just because in my opinion, that's where we could really start to see, a lot of this momentum or a lot of this demand possibly pick back up. Right now, again, this is just from a technical perspective, right? From a technical perspective, I really like this 107, this 106 range right here for us to actually go higher and seek higher pricing. Okay, so what does that mean? That means for right now, right, I am bearish the US dollar from a short-term perspective. Okay, long-term, I'm still very much bullish. But from the short term, guys, since we are in this period of correction, right, we have to, again, trade from the short term perspective. Okay, you look at the fundamentals and you look at the data, guys, to give you your bigger picture, right, your overall longer term projections. But you use the technicals to really identify the short term plays, the short term moves. What is happening from the intraday perspective, right? And that's what we're looking at. From an intraday perspective, or even just from a short term perspective, I think that there is a good chance now for price to really make its way back down to around this 107, right? And then from there, that could be the opportunity, guys, where we do start to find a lot more demand for the dollar. Okay, now again, things can absolutely shift and change depending on what happens from news, right? From the data. Okay, you never know, guys, right? If the unemployment rate does come out tremendously, different than what's expected on Friday, then yeah, that can obviously shake some things around as well. But these are things, guys, that we, at least for me, from a technical perspective, I really would like to see it make its way down there. Right now, how can we actually get down there? Well, we're gonna have to have a few levels that need to get broken. Right now, guys, we ended up closing below this level of structure right here that I just highlighted. And again, I'm not overcomplicating my levels, guys. When I'm analyzing these markets and I'm trying to create certain key levels that are interesting for me, I don't overcomplicate things, right? I look at what has happened in the past, right, and I identify these key levels as points of interest because of how the market is reacting to them, right? In the past, guys, this has acted as, a level of quote unquote, resistance, right? And then price ended up breaking it, and then it acted as a level of support, right? So price just broke right back below it now. So guess what can possibly happen? Again, we're on here from a bigger perspective, daily time frame, right? But we just broke back below this key level here, right? So that itself is telling me that we do still have a lot more bearish momentum to go, right? So from this level right here, guys, for the dollar, right, could be an opportunity for us to really look for some continuations to the downside for the dollar itself. Right now, the main areas I'm gonna be looking for and keeping my eyes on, guys, is definitely gonna be probably just a push right back up to this 110, 111 level, and then from there, I think we could actually go ahead and just continue, seeing lower pricing here now for the dollar as a whole. Right now, just to give you guys a different outlook as well, guys, because again, I understand that the market is gonna do what it wants to do at the end of the day. Right, overall direction that it decides to do, that's out of my control, right? So what if the market actually does something like this, and we actually end up, gaining a lot of strength, right? And we break back above this level of structure. See, that's telling me something, right? If we're able to go ahead and break the highs, guys, and we're able to see that, then I mean, I would be more than okay with seeing this market absolutely rebounding, and then making its way much higher from there, right? So these are things that we're keeping our eyes on, especially for me, guys. I'm gonna keep my eyes on for the dollar itself. But as of right now, I definitely do think we're still more bearish for the dollar as a whole. So I'm gonna be positioning myself, guys, to take advantage of something like that, right? That bearishness that I expect to come in. Okay, so again, this area right here, this 111 level, it could be the area where we could start to look for more continuations. Right, so that's just my outlook on the dollar as a whole, guys. Now let me go ahead and take a look at just a few pairs. Right, it's not just gonna be me on tonight's call. I do have a bunch of savages on the call with me as well, guys. My partners, my fellow educators, a part of the Profit Society, are also gonna be breaking down some charts, giving you guys their perspective, right? And I love this because being able to get perspectives, guys, from different traders that have experience, that have been doing it right for years now, right? I think I don't even know who's I would say quote unquote least experienced out of us, right? But I think it's still between 5 to 7 years is like the amount of time that all of us have really put in individually, right? So we have a lot of experience, so it's dope to really just bounce off ideas and give you guys all our different perspectives, right? So, but let's go ahead and take a look at the euro now. So what can we expect for the euro, right? Well, very simple. I'm gonna go back to the weekly time frame, right? And I'm gonna also start to look at where we could potentially expect this market to go to, right? Well, for me, guys, I'm very interested in seeing if we can make our way back up to around this 101 points or 1.02 level here for the euro, right? Because I think from that level up there, guys, because we are coming back up into interesting price points here for the euro, right? But I think if we're able to make our way back up to this 1.02 level, that can be an opportunity for us to absolutely go ahead and look for maybe some more continuations to the downside, right? To align ourselves back with the overall bigger trend. Right, so I'm very interested in that 1.02 level for the euro. So we'll see what the market does end up giving us. If we're able to see price come back up there, then that would be absolutely amazing, right? Then I'm personally going to be looking for some great opportunities to go ahead and go short on, right? But overall, that's my overall bias. I want to see the market go ahead and continue bullish to then eventually go ahead and give us an opportunity to go back bearish. Okay, so how can we take advantage of something like this now, right? I mean, What we do is we create the blueprint from the bigger time frame, right? I did this on the weekly and the daily. And now as we work our way down time frames, guys, just keep the blueprint in mind, right? From the bigger perspective, bigger time frame, I think we're making our way up here. So how can I take advantage of something like that? Well, I mean, there's nothing that we could really do now because we just already seen a massive run from today for the euro. But the moment that we do experience a pullback in these markets, guys, can be another opportunity to go ahead and now align ourselves with what our bigger blueprint pretty much is, right? Again, my blueprint is to us preach to this 1.02. But in order for me to actually take advantage of it, doesn't mean I'm just going to jump in randomly right now. No, right? We don't just jump in randomly, right? That's not what we do, right? We have to wait for price to get to an area that makes the most sense, right? That's going to give us a high probability opportunity. So for me, I would consider a high probability opportunity, guys, for the euro if we are able to see some type of a pullback. Now, is it possible to actually try to short the pullback and look for an opportunity to sell? I mean, yeah, right? It is possible if you're experienced, right? But again, I want to make sure that you guys are aware what the overall bigger blueprint is for me. All right, I think that there is a good chance for price to make its way back right up into this area right here. All right, I'm looking at the 0.98, I would say 0.988 level, right? And then from there, I really like the opportunity to then go ahead and look for higher pricing here for the euro. Okay, so very interesting, right? I'm gonna keep my eyes on this one. This could be a very, very, very good play here. It's just a matter of being patient now, right? Now, again, if you are experienced, then yeah, you can come to these smaller time frames, guys, like the 5-minute, the 15-minute time frame, right? And absolutely look for an opportunity to go ahead and ride this down if you know what you're doing, right? And if the bias aligns with you, right? That's very possible, right? Again, I'm not saying it's not possible to actually catch all these moves, right? Because I would be lying to you guys if I said I didn't do that. But I am also an educator, and I also understand that we have a lot of newer traders on the call. So I also want to make sure that we're, giving you guys the opportunity to take advantage of the highest probability setups. Right now, I'm not saying a shorting opportunity here is not a high opportunity, because it could be a high probability opportunity if it makes sense. But overall, I just like giving you guys the bigger perspectives, and then from there, it's up to you to actually just make sure to align yourself with that. Okay, because there is a possibility. I mean, we did just see this little short break of structure, guys, and yeah, there is a possibility for this thing to start shifting lower. So, take advantage of it if you like it. I would personally like to, if I was looking to short the euro, right, to go ahead and ride us down into, say, this 0.98 levels, then look for the bigger buy. I would be looking to short for, I would like to short it somewhere up at these levels up here, right? This is where I would like to short it from, right? I would like to short it from up here, right? So if price is able to make its way back up there, guys, around the 0.998, then yeah, I like the opportunity to short, because for one, I mean, the risk to reward is going to be insane, right? The risk to reward is going to, I mean, even if we did just put the stops above the high for around a 16 pip stop, targeting back down to these lows, or yeah, all the way back down to this 0.988 level. I mean, look at the risk to reward, right? 5 to 1, 6 to 1 risk to reward, right? I mean, that's phenomenal, right? If we're risking 2% and our risk to reward, guys, is 6 to 1, I mean, we're risking 2% to go for 12% gains, right? That's phenomenal, right? Imagine that, right? That's what we consider low risk, high return type of opportunities, right? So yeah, if we are able to see it, it's there, right? It makes sense. Okay, but again, do not lose sight of the bigger picture, family, right? Are you guys with me? Drop some threes in the chat if you guys are with me, right? Drop some threes in the chat if you guys are with me. I want to make sure that we're all paying attention, family, right? Because there's no activity in the chat right now. I want to make sure everybody's awake, all right? Because I know some of y'all probably turned on the live stream and probably sleeping right now, right? Your eyes half awake, half open. Nah, we got to make sure we are awake. We got to make sure that we're paying attention, family, because like I said, this is massive value right here, and really just breaking it down, guys, from a higher time frame perspective all the way back down to a lower time frame perspective, right? Trying to correlate these time frames is absolutely crucial, to trading as a whole, right? So just another update for the euro. Again, my bigger perspective is this is my blueprint, right? I'm on the bigger time frame. Let's go to 4 hour, right? I think we could sell down to then eventually look for this move higher. And then up in these levels up here, guys, where I'm really going to be expecting the market to go ahead and give us a bigger shift lower. Okay, because the overall sentiment has not changed. We're just in a period of correction. Okay, please learn how to differentiate all of that, right? A correction between you have to learn how to differentiate, guys, a correction and an overall reversal, right? Because those are completely different things, right? So very interesting, though. Very interesting opportunity as well that we can even take advantage of tonight. I'm actually going to keep my eyes on this euro, guys, because like I said, I do think there's a good chance for price to possibly go ahead and shift lower from these areas, right? So I'll keep my eyes on that, see what happens. You know, we win, we win, we lose, we lose. It doesn't really matter. The opportunity was there. It made sense. I, managed our risk, and that's it, right? So that's one I'm definitely going to keep my eyes on is that euro. Right now, another one, guys, is gold. Right, gold was looking very juicy earlier today. In fact, I actually didn't end up taking the trade. Right, I'm actually kind of upset I didn't take the trade because I was actually looking for the buy opportunity, guys, right here. And this is literally when we were live this morning, inside of the Profit Society community. Right, we actually have a bunch of beta testers inside of the community. I appreciate every single one of you guys that is a part of the beta test right now for the new platform, the Profit Society, which is a social media platform for traders. All right, big shout out to you guys. You guys are definitely helping us out tremendously with these testing period that we're currently in. Right, but yeah, we were actually live earlier, guys, in our actual community, and when we were live, I was looking at this opportunity to go ahead and go buy. All right, I didn't end up taking it just for my own reasons, but overall, it looked absolutely good. Looks absolutely juicy, and this thing just absolutely took off. But what can we expect next now, right? What can we expect next for gold? Well, I'm thinking of it more so similar to how I'm looking at Euro USD. I think there is a good opportunity, guys, for this thing just to continue to roll over now and pull back a little bit deeper. I'll be interested in seeing gold make its way all the way back down to around that 1711, 1712, just from a short-term perspective. But this thing could really pull back all the way back to maybe, I would say, around this even 1695 level, right? So there is a chance for this thing to pull back, guys, some ways here. 1690s, 1700 levels, it is very possible. But just based on how we're looking at it from a smaller perspective, if you wanted to take advantage of it like tonight or tomorrow, then I'm leaning towards more of this thing just continuing to go lower and lower and lower, right? I think that there's a good chance for us to make it to the 1712 level. So if I'm looking for a position, if I'm looking for an opportunity here, guys, then it's definitely going to be looking to short gold for sure, right? So that's something I'm going to keep my eyes on. Again, if we can make our if I'm going to give you guys like an actual area to keep your eyes on, I would say maybe around the 1723 level is very interesting for me, right? So if we are able to see price come up to around the 1723, I think that could be a very juicy opportunity if we are able to see. Again, that's if, right? I don't know if exactly if price is going to make its way up there, but if we are able to see that make its way up there, then I think there is a good chance for price to actually go ahead and give us a nice shorting opportunity here for gold as well, guys, right? So those are pretty much the ones I'm going to be focused on tonight, gold, Euro USD, and seeing how those end up playing out. But overall, guys, I think they are very good opportunities. Just do not lose sight, though, of what the bigger objective is, okay? So I'm going to be patient with this. If we can see a pullback, amazing. If this thing just leaves without us, then it is what it is, right? Nothing we can do from them. All right, let's see what else we got here. That breakdown was amazing. I've done it before, but it didn't click till now. Let's go. I love that. Shall we give kind of shout out with more likes? Let's go. I definitely appreciate every single one of you guys, too, that's dropping those likes. It definitely means a lot. And it definitely encourages us to continue doing this, guys, and just providing y'all with massive value. Let's see now. We listen to all this value. Let's go, Jason. I love it. AUD USD, please. Yeah, I can take a look at Aussie real quick, and then I'll pass it on to the next educator. Let's see. Want a beta spot? Yep, exactly. All right, so family, if you guys do want to actually get a beta spot and actually be one of our testers, all right, and test the social media platform before everybody else, right, then yeah, go ahead and tag us on Instagram. All right, our Instagram is profitsociety.co. Just tag us, on your actual story, and we could definitely go ahead and get you inside of the beta as well. Right, but let's go ahead and do a quick rundown on AUD USD. See what we got going on here. So overall, guys, this thing is just still very much bearish. Right, very, very much bearish. We've been very choppy as well for the past few weeks, as you guys can see, very, very much choppy. But I think right now, guys, this is definitely leaning like it's gonna just drop. Right, this just looks like it wants to tank. Right, it does just look like it wants to absolutely tank. Right now, I am gonna keep in mind as well for Australian dollar, there is a small chance, I think, for price to make us, make a move towards this 0.66 level. But just looking at how price action is right now on the 4 hour, it just doesn't seem that way, right? We actually had this one big old 4 hour candle right here, come up and clear a lot of these highs, and ever since that move, we've just been showing a lot of selling pressure, coming into play, right? So this looks like it's prime, guys. For I mean, I think I think this is gonna continue to drop, all right? I think it's gonna continue to drop, right? We could probably realistically target, or at least see price smash this level, but ultimately make it its way all the way back down to that 0.636 level for Aussie, right? So for me, I'm a seller of Australian dollar. I think it looks prime to actually continue to sell off. So that's what I would do. That's how I would position myself for sure, right? For Australian dollar going into tonight. It just looks prime for this thing to absolutely continue to drop for sure, right? So that's a good one as well. We'll see what happens with that. Maybe if we see, some type of a pullback up, that could be an opportunity to go ahead and get involved. I don't know if I want to chase the Australian dollar right now because this thing is already starting to drop, right? So I don't want to chase it right now. But if for whatever reason we are able to see some type of a pullback, maybe around the 0.65 level, right? From that 0.65, guys, could be a good opportunity to go ahead and go short on AUD USD for sure, right? So that's my bias. I'm just looking to continue to short that one for sure, right? But let's see who else we got here, guys. Let me go ahead and see what we got. Let's see. Give me 1 second. Let's see. All right. So, family, with that being said, what I do want to do is I actually want to bring on a savage on the call with you guys, right? Somebody that I truly have a lot of respect for in this game, right? I literally seen this individual absolutely, take his trading up to new heights, going from a collegiate athlete, D1 athlete, guys, to full-time trader, and now going to be to a point where he's eventually going to start making more through trading than he would have if he actually did pursue his professional football career, right? It's kind of crazy how life works, but I truly believe this individual is going to be, a face of this industry, right? Just because of the way he educates, the way he breaks stuff down, and the results tell a story itself, guys, right? So I want to go ahead and introduce the man, the myth, the legend, right, Mr. Raymond Baylor to the table so he can come on here and really break down, guys, a lot of pairs for y'all and really just give you guys a very in-depth insight onto how to really look at these markets from a smart money perspective, right? So all my smart money traders, I know there's a lot of y'all in the chat that love those theories, love those concepts. Definitely be prepared because he's really going to break down those exact concepts to you guys in a way that you guys truly understand, right? So without further ado, my brother Ray, bro, are you there? Let me make sure you're host. Yeah, you should be co-host. And you can go ahead and do your thing, bro, if you're there. Let me just make sure. SMC here. Okay, Gordy, I see you. Yeah, you're good, Ray. Do your thing, bro.
Yo, can you hear me? Can you hear me?
Loud and clear.
All right, perfect.
Loud and clear.
All right, perfect. All right, but sorry, I'm still kind of new to the the YouTube stream, so let me know if I'm good. Let me know if I'm good. Before I just start rambling. I think y'all can hear me. I'm pretty sure somebody will message me if y'all can't. But first things first, want to say big shout out to Abel. Big shout out to, Skaggs, Kyle, the whole Profit Society. Everybody for just tapping into the Zoom call, this YouTube stream. For the people that don't know me, my name is Raymond Baylor. I go by Wall Street Ray. Y'all can follow me on Instagram at Wall Street_Ray. And been trading now for a little over 4.5, going on 5 years. And one thing I want you guys to really truly understand is, this is a process, right? This is a process, and it's something that you have to constantly get better at every single day. And this is the reason why we're consistently hopping on these calls, giving you guys this value, giving you guys this education. And I just want all of you guys to essentially fall in love with the process of learning, right? You learn, then you remove the L, right? Then you start earning, right? And this is the reason why a lot of your top earning traders and the people that make tens of thousands of dollars a day, they're so nonchalant because they've seen it all. They've been through all the ups and downs they could possibly go through. They've lost, they've won, they put in they put in a 10,000 hours essentially, right? So, I want to challenge everybody on this call to, really fall in love with the process more so than the outcome, right? And that's really the thing that's going to help you get to that desired outcome a lot faster. So just with that, again, I want to say thank you for everybody for hopping on, and, let's dive straight into it. All right. So, just starting out with USD JPY. I ain't gonna lie, I don't really trade USD JPY often, but I remember somebody asked on Sunday when we did our live stream on Sunday, and I was talking about us getting this spike up into this zone, and then this bearish move right here, right? Now that actually happened. Now I didn't take the trade because again, I'm not the biggest fan of UJ, but I do see some potential here, right? And I do just want to mark this up for you guys, just so you guys can start taking notes and stuff like that. May not give some actual, entries on this particular call, but I will give you price points where I'm looking to get into the trade, right? So, make sure you got like your pen and paper. I would write down the price points, and then I would, use those price points to be able to take them in the future, right? Let me see something real quick, guys. I'm checking the group real quick. Make sure y'all can see. Y'all can't see my screen? Okay, hold on. Hold on, y'all. Can y'all see my screen now? Y'all should be able to see my screen now. Let me know if y'all can see my screen now. Let me know if y'all can see the screen now. I'm still figuring this thing out, y'all, so I'm sorry. Let me just make sure we getting right over here. I done lost the stream over here. Let me do this. Okay, bet. Oh, I keep doing that. Y'all ain't gonna let me do this no more. I'm sorry, y'all. Here we go. Bet. We good. All right. Type some threes in the group if you guys could see my screen now. All right, bet. They say they could see it. So with that said, I just want to take a look at USD JPY real quick for you guys. And then we can go ahead and move into some more charts, right? So with that said, last Sunday, somebody was asking about USD JPY, what I saw happening on here. And essentially, we was in this area of consolidation right here. And, usually when you have consolidation, you'll get manipulation, then continuation, right? So here, obviously, we're in this area of consolidation. Then we got the manipulation of the highs because we know that there's money resting above the highs, which was this high here. And now we're getting that continuation, right? Now that we've actually broken previous lows, all right, and we've broken the lows here to make a new low here, now I'm looking for an actual continuation opportunity, right? Reason why I'm looking for a continuation opportunity is because, we still have some suspect lows here. We still have some lows that don't have much power. We still have a lot of wicks here that can be used as liquidity as well. And I like to look for these areas to get filled in because the market likes to fill in these open areas of liquidity, right? So if you understand what internal range liquidity is, it's essentially, when you have these trading ranges and we understand that there's money in between these trading ranges that need to be filled, all right? So just understanding that, I personally feel like USD JPY will continue to the downside, all right? Whether or not we take out this low or not is yet to be seen. We may take that low out, we may not. However, I do believe we will get some continuations, right? Now, with it being just about 10 o'clock Central Time, we do have some time for this setup to happen. This may happen tonight. This may happen, sometime tomorrow. But what it is that I see personally happening is us coming back up to the extremes, right? Coming up to the high point up here. And then, we will get that continuation area. Now, The reason why I'm targeting this up here is essentially because none of the highs here swept anything, right? Obviously, I could probably look for a sell opportunity here or something like that. But considering that there's still liquidity resting here, okay, and also here, this would be a low probability trade setup, right? So this is when it comes to, you know, trading smart money. Everybody just looks for the same things essentially, right? They only look for buy to sell candles and, you know, take trades from there. And essentially you could be profitable. Don't get me wrong, because the risk to reward is so low most of the time, or this low risk, high reward most of the time. But you do want to get in the habit of, you know, making sure you choose the right points of interest and having real reason behind the points of interest that you choose, right? So if we work this thing top down, right? We work this thing top down. Obviously, we have this area of supply here because we're leaving this higher time frame point of interest, right? So as we actually trade back up into this point of interest, then we realize the market makes a new low. Now, if you know my personal strategy, which I call the Hesi crossover, right? If you know basketball, you know that your Hesi game got to be on point, right? Crossover game got to be on point. Now, you know, essentially I came up with this concept because I was doing a one-on-one, and, you know, I'm giving all these smart money concepts. You know, I'm talking about, you know, these liquidity pools. I'm talking about, you know, pretty much all the terminology. If you studied ICT, if you studied these, you know, higher concepts, right? And, you know, somebody just wasn't quite picking it up. So I was like, how can I truly simplify this for the average person to really understand what's going on? And essentially, you know, when we talk about liquidity being created and stuff like that, you're looking for obviously a buy before a sell, right? So obviously we break these new lows, we break a low here, all right? And essentially we have this high pushing into this low. But the hesitation that takes place before that happens is very important, right? Because anytime we hesitate off of demand and then demand fails and we make a new low, this is our hesitation, right? Hence, we call it the Hesi. Then we cross over bearish, or vice versa. We'll Hesi, then cross over bullish, right? In this instance, it's bearish. Now, what this means is the hesitation off of demand means that the market is changing hands, right? It's switching who's actually in control, because this is a bounce or break area where the market could either bounce here and go higher, or it can hesitate, then break and go lower. But if it was to go higher, the demand would still be in control. The fact that it hesitates and it has to think for a while, that means that, you know, the market is taking time to actually switch hands. It's actually taking time to see who wants to be in control. So once we actually decide that we're going to Hesi, then cross over bearish, now we know that the bears are in control, right? And again, I only look for areas that have this hesitation, right? It may not always look like this. It may just be a wick. It may just be a candle, but there's always going to be some sort of hesitation before we actually break structure and make a new low, right? Or vice versa, make a new high. And that's how I pick my points of interest. So since this hesitation does not sweep any liquidity, I'm going to use this in the future, all right, as liquidity, right? So that pretty much means that I can't take a sell until I break above this high up here, all right? So once I break above this high, that's where I'll be looking to continue my sales, okay? Now, understanding that means that this high is probably a false sell. And even this high here, even though this high did put in a new low, I understand that. Trust me, I see it loud and clear. But at the same time, you know, I believe that this market is going to turn bullish for a while, take that high out, and then we'll continue bearish, all right? So this is essentially what I'm looking for on USD JPY, all right? So what that means is we could probably go bullish today. So let's see if we see anything that correlates with that setup, all right? So on this particular time frame, you know, we do have big body candles here with an imbalance here, right? So the market obviously sells before it buys up. The market can definitely react in here, right? I also see a lot of action in the past happening on this level. So obviously there's a lot of activity happening on this level, and then the size of the candlesticks as well is something that I like to pay attention to when I'm looking at particular key levels, right? So the fact that we have this big candlestick, this big candlestick, this big imbalance, this could be a potential area where the market wants to drop down into and then continue upward, right? In the same breath, I also have to point out that this low could also be potentially rated. Now, I know a lot of people might be like, okay, well, you're giving me two different setups, right? Which is fine, because as traders, we're here to react to the markets, not necessarily predict the markets, but react to the markets. And, with me having very low risk, high reward trade setups, I put myself in a position to where I could take multiple trades and still be profitable, right? Like, I'll take a point of interest multiple times. If I might get stopped out, I might have a 5-10 pip stop loss, I might get wicked out, and I'll actually get back into the market, because typically I'm only risking 0.5% per trade, especially depending on the account size, right? So just understanding that, I could take 3 shots at a trade and lose 1.5%, right? And essentially, this is why I like to give myself multiple points of interest, right? Sometimes, not every single time, but a lot of times I like to give myself multiple points of interest just to give myself trade flexibility, all right? Just give myself multiple possibilities of what I could see happening, right? So on top of that, obviously we have this nice sweep of the lows, and then we have weak highs that are resting above, right? So we have weak highs up here. All of these weak highs, which can be used as future targets, because remember, we like to fill in these empty areas of money, right? So if you guys see this, this could very well be one of those empty areas that gets filled in, all right? So just be on the lookout for UJ. Could come here and bounce, or come down here and bounce, but those are the two options that I see happening there, all right? So I'm not gonna be long, because I know we got some other guys. I'm gonna just keep it pushing pretty much. I see like 2 other setups that I'm interested in, and then I'll call it a day. Go ahead and pass it to the next speaker, all right? So now I pretty much want to talk about Euro AUD, and this is a setup that I'm definitely going to take tonight, especially if it comes down to my entry. And the reason being is because obviously we're very bullish, right? Market has been bullish for a long time. I'm not going to try to sell against the momentum right at this moment. But one thing I noticed is, over here we have a slight sweep of liquidity. However, I always tell people, you want to pay attention to how the market actually sweeps, right? Like, we pushed above an old high here, but we start retracing down slowly, right? Now, if we take an old high, for example, then the market breaks above and then it starts to do this, it's more than likely just going to continue, right? But if we break above and then react violently, then that's when you want to look for that sell opportunity like that, right? And I'll give you guys an example just before I even analyze this pair. AUD USD was a prime example of that, right? Where we break above a high, but the reaction is very violent, right? We break above, then we come right back below instantly. And then this is what tells you that this is probably the correction. And then we'll get this continuation like Abel had already spoken about. And this is something that we actually looked at this morning. Not sure if any of you guys took advantage of that, but it's something that we is definitely talking about. But now that we understand that, I'm pretty much bearish on Australian dollar, that would make sense for us to have Euro AUD turn bullish, right? Because I'm bearish on AU. So that means Australian dollar is weak, in my opinion. So that means the euro should be getting stronger against the Australian dollar, all right? So now that I'm looking at this, I see we have this old high here, okay? Now we break above the old high. Not only do we break above the old high, we come back down here, meaning we do this, which is a sell to buy pattern right there. Even though it just looks like wicks, if I come to the lower time frame, you'll see it very clearly. We have this sell to buy pattern, right? Now, the thing is, if this market wanted to sell, it would have swept these highs and then dropped. The fact that we swept these highs, we swept some lows and then impulsed up again, in my opinion, that means that the market is still bullish, right? And this is, this isn't necessarily a sweep of liquidity, but this is just almost like a break and a retest in a sense, but more of a institutional understanding of what's going on, right? So now that we got that understanding, I know that this is my current trading range, all right? So I got my low here. Then I got my high up here, all right? So this is essentially the trading range that I'm between when the market is here, right? So when the market is here, I want to see us come in and fill this area of imbalance, right? Which we do perfectly. And this is also that Hesi, because as you can see, the market leaves wicks. Like I said, sometimes it's consolidation, sometimes it's just a tiny little wick like that, right? So the market leaves me this tiny little wick before it breaks these previous highs and then makes a new high, right? So currently this is my low and this is my high of the range. So now that I have my range identified, now I'm looking for the Hesi to get liquidated before I take opportunities, right? So now that I got that understanding, where's my looking for my replay tool. Hold on, y'all. Whatever, I'll just move forward like this, right? So now that we push into this area of imbalance that we have here, all right, and then we see the market reverse, that pretty much tells me that this bullish range is valid, right? Because we came to our point of interest and then we reacted. Not only did we react, but we also made a new high, right? So now that I got that understood, now I can come down to the 1 minute. This is my entry time frame, all right? So now that I'm on my entry time frame, okay, now that I'm on my entry time frame, now I'm analyzing, and essentially I'm looking for the same thing, right? The same pattern that I've seen on this higher time frame is the same pattern I want to see on this lower time frame because the markets are fractal, right? We see the same things just about everywhere. So what's happening here, right? We got a sweep of the low right here, giving us this new low where we took liquidity, all right? Now, not only that, but we also make a new high, breaking this previous high, right? So now this becomes the bottom of my range, all right? And this becomes the top of my range on this particular trade set, right? Now, not only that, I also have my area of hesitation before we cross over. So this is my Hesi crossover right there, all right? So now that I have that, I can analyze the Hesi itself. And if the Hesi is weak, meaning it does not sweep liquidity before crossing over, that means it's gonna be swept on the retracement, all right? So what I mean by that is if this move doesn't sweep anything, the retracement will sweep it, right? If this move did sweep something like that, then we could take a trade from this area, right? So pretty much the Hesi just tells me how the retracement is gonna form, all right? And I feel like this is where a lot of smart money traders are, making the mistake of only looking at these candles down here. Obviously on this particular trade, I'm looking to take a trade on this candle, but there are instances where you have to take a trade here. And a lot of times we don't analyze this price action to tell us where it is that we're going to take a trade and how this retracement should form, right? So for me, I believe that this is actually going to trend down a little bit lower, right? We're going to come down, we're going to take this low, and we're going to take these lows, right? Once we get down here, I'm interested in seeing how the market reacts, and then I want us to go bullish from this point, right? So for this particular setup, I'm planning on risking about 17 pips, right? And targeting 97, I'll just say 100, right? About 100 pips. So that's 5.77 risk to award, little under 1 to 6, right? Which is solid. And that's just for our first target, right? Because understanding that this is my entry time frame analysis. However, I'm still going off of this low and this high as well. So that way I can target these highs for my first take profit, all right? So even though I have my entry down here on the lower time frame, I'm still targeting this point of interest up here for my first target. So my first target is going to be a 1 to 5.7, all right? So this is something that I definitely see happening tonight. Very confident in this trade setup. You know, we can kind of look at this as a pocket of liquidity forming right there. So you kind of want to see how the market, you know, tries to set people up. I know a lot of people that are looking at this move here, where it's like you got the trend line bounce, your trend line bounce. And don't get me wrong, there are times where the trend line will work. I don't personally trade them, but you have to realize what's actually going on. The reason why a trend line fails after a few breaks is because it's building up liquidity. Every time we bounce on this trend line, you got to realize that this pocket of money just gets bigger and bigger, right? The liquidity that's resting underneath it just gets bigger and bigger because people are chasing the buy. There's people that are buying right here, putting their stop loss below. Then once we tap again, there's people buying here, putting their stop loss below, right? And that third time is going to be more people that buy here, put their stop loss below. So realize the more people that are buying this market, it would behoove the market makers to come down and take them out because everybody can't win. Essentially, when you win, somebody else loses. And when you lose, somebody else wins. So this is the reason why trading essentially, you know, a lot of people think the markets are rigged and stuff like that. But if you realize that to a degree, they have to be, in order for there to be winners, there has to be losers. So you have to just make sure you're not one of those losers. And the way that you know you're not going to be one of those losers is you look at the retail perspective, and there's nothing wrong with the retail perspective. You want to be able to understand what's really going on though. And then you can kind of look at both scenarios. You could say, okay, I see what they see, but I also want to see why they might fail as well. You don't just want to see the markets one-sided. You want to see, you know, what it is that's easy to identify. And then you also want to see, okay, why is it so easy to identify? You know, there may be something else there, you know, underlying. There may be something else there that the market makers may try to manipulate in order to, you know, liquidate other orders in order to put orders on their side of the trade, right? So you got to realize, let's just say, you know, there's 1 million people across the world trading EU, and all of their trades are adding up to, let's say, you know, $10 million, right? If I can manipulate you out of these orders, or JP Morgan and Goldman Sachs and whoever else is moving the market, if they can take you out of those orders and you lose, that just makes that much more money available for them to put into their orders, right? So this is the reason why people have to get taken out. And that's why you have to look at, you know, the opposite side of the concepts and not just looking at things narrow-minded and one-sided, all right? So for me, I'm going to be looking at this particular trade at, give y'all a round number, we'll do 5322, all right? 5322 is where I'll be looking at, you know, taking advantage of this particular trade and going long for 100 pips, all right? So that's that. Let me go back to the stream real quick just to make sure y'all ain't lost in the sauce. I want to go ahead and check the chat box real quick. Okay, don't seem like y'all asking too many questions, so we good. So let me go ahead and move on. Then I'll go ahead and pass the torch to my guys. GA, right? So GA, essentially I see the same thing happening, right? GA, essentially I see the same thing happening. And here as well, I see the same thing. This point of interest here, where we push up, We hesitate off of supply. Not only do we hesitate, but that hesitation creates inducement, okay? Or internal range liquidity. So now I want us to actually take this out and then continue up, right? Now, I'm not oblivious to the fact that, you know, we have a little more imbalance down here that we could fill out. Reason why I'm not too, you know, hell-bent on it personally, though, is because, you know, these candles down here, this is pretty much where the imbalance starts, right? We filled in a nice little portion of that imbalance, so I could see us continuing bullish, right? In the case that this trade doesn't play out, I will be targeting it again down here. And this is where risk management comes into play. I said it this morning. You can lose the battle, but win the war at the end of the day, right? You can lose the battle, but win the war. And a lot of people don't think like that when it comes to trading, because we look at trading by trade basis. You don't look at it from a weekly, a bi-weekly, or a monthly basis. There's been times I've been negative all week. And then Friday morning, you know, I catch 150 pips with a 6 pip stop loss and I make all my money for the week, right? So you can't look at it like, okay, you know, I have to win this particular trade, right? Obviously, you want to win as much as possible. You don't want to just mindlessly take trades. You don't want to take ill-advised trades, but you do have to realize that trading profitability-wise is an accumulation of wins and losses, right? And it's an accumulation of wins and losses mixed with great risk management and mixed with great trade management. Risk management is just how much you're risking, but trade management as well. Where are you partialing out at? Where do you close 50%? Where do you close 80, 90%? Where do you close your entire trade? What's your target, right? And when you have all of those things and you can be consistent for 20, 30, 50, 100 trades, that's where your profitability comes from. Your profitability doesn't come from one particular trader. And, you know, I had a buddy, we was on the phone earlier today. I ain't gonna put him on blast. I ain't gonna say his name, but essentially he blew one of his funded accounts, right? And I asked him, I said, what's going on, man? I noticed you lost like 4% in one day. And he's like, man, I've been studying and I learned this strategy and I was just trying to play out. I was just trying to back test, or not back test. He said he's just trying to win the money because he learned the strategy. And I had to explain to him, a strategy is not a guarantee that you're going to be right. A strategy is simply a frame of mind and a mindset that you choose to follow. You got to realize these markets have been around for decades, and thousands of people, are millions of people, are attempting to trade these markets, right? So a strategy just means there was somebody that really decided to take the time to put their perspective into the markets. So when you're trading a strategy, you're choosing to align your trading with somebody's perspective, right? It doesn't mean that other perspectives can't play out. It doesn't mean that you know, double top or double bottom won't play out here and there. It doesn't mean that a trend line will never play out here or there. It just means that the strategy that you personally choose to follow has certain rules, guidelines, and parameters that you must follow, right? And you know, you will lose, but at the same time, the strategy is what protects you when you do lose. Because if you lose and you're only losing $100, but when you win, you make a $500 to $1,000, you're not really too concerned about losing, because you know you have to win eventually, because it's a law of averages. You're not going to lose 20 straight trades, I guarantee you. So if you're taking 1 to 5s, 1 to 10s, you have to be profitable. And this is why I even I like taking losses sometimes. I don't love it, but I like it because I know that I can make money. And it's like, I love the fact where it's like, man, I just took like 3 losses and I make 1 win and I still make, you know, a considerably large gain for the week. And it's like, it's cool to see that. It's cool to see it play out, but you'll never see that play out if you don't just trust it. Because I'm pretty sure all you guys heard this before. I'm not telling you nothing you've never heard before, but most of us just don't believe it enough to actually try it long term. You try it for a day, you try it for a week, you say, screw this, it's not working. Or you try it for 3 days, and then you revert back to your old patterns of behavior, which is over leveraging and not having a plan. So I just want to challenge you guys to, you know, try this for the rest of the year. and watch how great of a Christmas you actually have, because you can't tell me it doesn't work if you haven't tried it. Most of y'all have been trading already. You've done it your way long enough, right? You've tried it your way for a couple months, 6 months, a year, 2, 3, 4 years, and you still bumping your head up against the wall. All right. So I'm here to challenge everybody on this call to just try it the right way for once. There's no shortcuts in trading. Trading is like that strict parent, right? You do anything, it's on your ass, right? You do anything you ain't supposed to do, there ain't no leeway, there ain't no mercy. And trading is like that. You know, it's kind of like the one time you over leverage, you blow your account. Or the one time you trade outside your trading hours, you lose. It's like it always happens to turn out that way. And as frustrating as it is, I believe that it's teaching us a lesson, right? It's teaching you that you'll get a lot further by doing this the right way than trying to find shortcuts. There is no shortcut. The shortcut is doing it the right way. Because if 3 to 6 months are going to pass you by anyway, you might as well do it the right way versus wasting precious time and precious hours of your life doing it the wrong way. So just with that, like I said, I didn't want to rant for too long. I do this. If you're in my mentorship, you know, I can rant like this for 2-3 hours. But, you know, for the sake of the call, for the sake of us having other people on this call, you know, I'm going to go ahead and, you know, pretty much end it right there. But like I said, I'm looking at EA and GA for today. Very low risk, high reward trade setups, almost a 1-to-6 on the first one. This one is a 1-to-7. So, you know, both of them play out. I'm planning on having a phenomenal night, possibly London session. I think it'll probably play out for London. So I'll stay up a little bit. If not, I'll just go ahead, set a pending order, go to sleep, see if we wake up to profits. All right. So with that said, guys, remember, if you took anything from this call, just take the strategy is not that important. There's billionaire traders out there that don't even teach strategy. They only teach risk management, right? Now, could you imagine that? Some of the richest traders in the world, they could care less about your strategy. They just want to know what your management skills are like and your risk management skills. So if you really fall in love with this concept, there's going to be a day where you look back and you're proud of yourself that you did it this way. You're going to be proud of yourself for being disciplined. This is where most people fail. Most people don't have that discipline, man. I'm telling y'all, you're gonna thank yourself for just trying it the right way, doing it the right way, rather than going in circles, doing it the wrong way. All right. So again, we got EA, we got GA. Feel free to mark this up on your charts as well, so that way you can see what it is that I see as well. I encourage you guys to, you know, take these setups again with great risk management, and we'll see what happens in the morning. All right. So with that said, I hope you guys are able to learn a lot. I appreciate y'all. If you guys want to give me a follow on Instagram, this is my page. All right. Wall Street _Ray. All right. This is 1 underscore, guys. All right. If you see somebody with 2 underscores, it is not me. If you see somebody Wall Street Ray _, it's not me. Like anything that's not this, it is not me. All right. So if you guys got some value, feel free to shout your boy out. Feel free to message me, you know, say, hey, bro, I got some value. We could chop it up. We could talk charts, whatever the case may be. I'm here to help you guys get to the next level and reach your goals, reach your dreams. All right. So I appreciate you guys. And from here, I'm going to go ahead and pass it to my boy, the man, the myth, the legend, Mr. Kyle Prasad. And before I even bring him up, I got to say this, man. I can't say enough great things about this guy because, you know, I watched him get involved in the industry at the age of 15, right? So while a lot of people were playing video games and a lot of people were, you know, just playing around in school, doing whatever they was doing, not even thinking about their financial future, this is somebody that was taking his finances more serious than a lot of grown men that have responsibilities, that have kids, that have a family to take care of. I saw this kid get up every single day, you know, grind his butt off to the point of being the youngest 6-figure earner in the entire company that we were all previously a part of, right? And what I want you guys to realize is that, you know, if he can do it, there's no reason why anybody on this call can't do it. You know, he hasn't even reached his prime yet. He's been able to impact thousands of people, been able to put, you know, his priorities in a place to where, again, he was able to hit the income of 6 figures at, I want to say 17, I believe, 17 years old. I don't even think he was 18 yet. So with that, that's phenomenal in itself. And I don't feel like we talk about it enough because we kind of normalized it. But bro, there's not a lot of people doing that. He's really one of one. He's a part of the 1% already for his age group. So if you ain't listening to nothing I said, definitely get this guy your undivided attention. And we guys going to see you guys at the top, from the top, because the bottom is way too crowded. Let's go.
Yo, what's going on? What's going on, guys? First things first, can everybody go ahead and drop a 333 in the chat for my brother from another mother, the man, the myth, the legend, Mr. Wall Street Ray. This guy right here is definitely a legend in the making. I appreciate all the wise words, man. I was definitely taking notes, definitely was marking up my charts the same way. So, don't be surprised if you guys see his setups play out going into tonight, going into tomorrow. For all you guys that are on the stream, I will go ahead and keep it short and sweet. I'll break down some of the stuff I want to go over. I also went over some stuff on the Sunday call that is definitely playing out. For you guys that know me or do not know me, my name is Kyle Hustles. I'm actually 19 years old. I've been trading in this market for about 4 years now. It's been 4 years that I've been trading, and I'll say about 3 full-time. So, I'm definitely excited to work with you guys here. I'm definitely excited to be a part of this amazing profit society. I will share a lot of the stuff that we are going to be getting into with this. But with that being said, I do just want to go ahead and first go over the DXY. For all you guys that are on here, the DXY is something that my boy Abel went over, and we pretty much have some of the same things. It's crazy because I actually dropped an analysis for the DXY in the Profit Society community for all the beta members, and in my private Telegram, where at the beginning of the week, I was actually expecting selling to start the week because I highly believe that at the end of the day, it's not ready to buy yet. Right. This could be bullish, but it's just like anything else. The market has to have balance. The market has to pretty much know where it's going before it goes where it has to go. Being honest, guys, whenever I see a 1 hour break of structure like this, we were creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, then a higher high. So technically speaking, once we broke this low right here, we pretty much broke 1 hour structure. And I want to just give you guys a little bit of sauce here. Whenever you see a 15-minute, whenever you see a 15-minute / 30-minute BOS, I always like to expect a 1 hour retracement, right? We always want to look in the continuation way of trading, right? Any break of structure, we're always guessing that it's a retracement unless it breaks major structure, like daily structure, like weekly structure. Once the market breaks some sort of daily structure or a weekly structure, that's when I would be looking to see a trend reversal, right? But other than that, a lot of break of structures are majority of the times just retracements on the larger time frame scale of the trend, right? So whenever I see a 15-minute / 30-minute break of structure, sometimes even 5-minute, right? I would say 5 to 15-minute break of structure, right? 5 to 15-minute break of structure, sometimes even 30. With the 30, I would kind of consider that more of like a 1 hour. So I'm just going to stick with the 5 to 15-minute break of structure equals a 1 hour retracement. Whenever you see a 1 hour break of structure, you can always consider that a 4 hour retracement. And whenever you see a 4 hour BOS, I like to see a daily retracement play out. And these are just general structure rules, right? A break of structure, somebody just asked in the chat, and I'm going to finish this before I answer that question. But a daily break of structure, BOS just stands for break of structure for the person asking. BOS just stands for break of structure. So whenever you see a daily break of structure, you can anticipate a weekly retracement, right? So, just being honest, guys, once you go down to a 5-minute or 15-minute, I can show you guys a lot of times when this plays out. Just being honest, there's a lot of times where the 15-minute might have broke structure, right? Like right here, for example. See, anybody looking at this, they would have been like, yeah, we made a higher low, then a higher high, then a higher low, but then it failed to clear the high, then it broke structure. A lot of people would be considering this a break of structure, and it is, but it's in the lower time frame. So once this broke structure, this can now be considered the new high, and then this could be considered the new low. And then right here is where we made our lower high point, and then we retraced down to here, which would have been considered a 1-hour retracement, right? When we got that 15-minute or that 5-minute, sometimes even if we go down to the 5-minute, see, when we went down to the 5-minute, that was most definitely a 5-minute break of structure. You probably could have seen something like this, and something like this low breaking. And then we could have caught something like this, but we wouldn't have been expecting it to break these lows right here, because a 5-minute or a 15-minute break of structure, that equals a 1-hour retracement. And as you guys can see, it pretty much did just that. My bad, the drawing tool just keeps messing up. Pretty much just did just that. It pretty much just retraced and came down to this 1-hour candle. Then it went back to break highs. So there are a lot of examples on this in the chart. I can't really point out every single one on this call, but that's up to you guys to take these structure rules. These are more of advanced structure rules. So for you guys that just know about higher highs, higher lows, that's kind of like a basic structure. But if you're looking to get into more into like advanced structure, understand that 5-minute/15-minute break of structures equals a 1-hour retracement for me. Whenever I get a 1-hour break of structure, that equals a daily. Whenever I get a 1-hour break of structure, that equals a 4-hour retracement for me. So whenever I see a break of structure on the 1 hour, I know that it's going to retrace more deeper on the 4-hour time frame. So if you're looking at a 4-hour time frame and you see like an imbalance or some sort of candles there, and it broke structure on the 1 hour, I wouldn't keep trading in that direction in the intraday, right? On the long term, for sure, I would still be looking for buys, but since it broke structure on the 1 hour and it starts going in the opposite direction, I'll be considering more lower levels to be filled on the 4 hour before we can continue in the direction of the trend. Now, let's say it were to break structure on the 4 hour, then I would be expecting the daily chart to retrace a little bit more deeper into lower levels to start going back in the intended direction. And, the same with the daily, whenever the daily breaks structure, I'll be looking for more of a weekly retracement. So when we get down into the DXY, when it comes down to it, we pretty much created a higher high. We had higher lows right here. We broke that, we retested that, and we created another new low. Once I saw that, I was like, yeah, we're definitely going to be going bearish for a little time until we receive another buy to start breaking all of these highs right here. So at the beginning of the week, I posted a chart, and on Sunday, on the Sunday call, I said that we were going to retrace a little bit until we can come down to this, I would say 108 to 108 flat to 109 level. So 108 to 109 level is where we can start buying this thing back up. Drop a 222 if you were on the Sunday call and you saw when I had dropped that, just so I know who's tapped in with me. So, honestly, guys, the reason why I'm kind of looking at that is because once we broke structure on this 1 hour, we were looking for the next 4-hour candle. And to be honest, guys, nothing here really looks appealing to me because like anything else, we need to retrace all the way to where the money is at, where all the orders are at, where all the banks are hiding their orders at. What is the last down candle before the up move, right? This whole up move that happened, this was a large impulse, right? This thing was going up for like weeks. This was a large impulse. So, you know, I like to play below the 50%. So just me being honest, based on this structure right here, I wanted to play below 50% because that's where we'd be getting discount, right? You always want to buy at a discount and sell at a premium, right? Whenever, and this goes for anything in life, right? Let's say you're looking to buy shoes, right? You know, there's a lot of shoes right now that are discounted whenever they go on sale, right? Like a great example, the off-white Nikes that went on sale like 2 weeks ago, right? The green ones, those were on sale at like about $200, $300, right? They were at a discount. So you want to buy things when they're at a discount, when there's very low supply of them, when it's very discounted, when it just came out, when people aren't really looking to buy, right? You want to buy whenever people are looking to sell or when they're freaking out, when the fear is through the roof. When the fear is through the roof, I promise you guys, once we reach down to these levels right here, that's when people are going to be like, yo, the dollar's going bearish now. We're now in a bearish cycle for the dollar. I promise you guys, you want to start looking to buy the fear and sell the greed, right? You want to buy the fear and sell the greed, right? Because whenever the market was up here, I bet you there was a lot of people that's like, man, the DXY is never stopping. The DXY is going straight to the moon. There's no retracement happening because it just looks like a big impulse. People are like getting greedy at this point. Like, yo, it's never going to stop. It's going to keep going up. Let me just keep buying. Let me just keep selling EU. Let me just keep selling GU. It was the easiest thing in the world at that point to just keep selling EU and keep selling GU. Literally every single morning you could have woke up and just sold EU and sold GU, and you didn't even have to have a support or resistance level. You didn't even need to have like a supply or demand level. You just needed to wake up and sell EU, wake up and sell GU. And at that point, people were starting to get greedy and they just kept doing it over and over again until the market suddenly rebounded, right? Whenever the greed gets to its maximum point, that's when the market snaps back. Now, the same is going to happen here. When we get down to these levels right here, everybody's going to be like, man, the dollar's now bearish. Everybody starts selling. You know, I bet you there will be news releases about it. But that's when the market is at its most highest fear point, right? Where's the fear at? When everybody's scared and not wanting to buy down here, that's when I'll be buying. When everybody's thinking that it's going to reverse right now, just because of their 61.8 fibs or because of their support and resistance, I'll wait for all of these traders that are down here that are buying the break and retest. I'll wait for all of them to get stopped out and for these lows to get raided. And then we start going to the moon. And, you know, again, let's talk about discount. Discount is anywhere below 50%, right? A lot of people with the fibs, they have like specific levels, like 61.8, 88. You know, I really resonate more with the 88. Like if you were to add 88 to my fibs, you know, I bet you it'll line up with what I'm talking about. There we have it. I added the 88.6 fib to my chart, and look how it's pretty much right in the middle of that zone that I have marked up. So if you are looking at fibs, I would only play off of 88.6. But me speaking, I don't really like to point out on like an exact fib level. I just like to understand the fact that anywhere below 50% is discount, right? If there is a, you know, for example, let's say there was NFT that was just going straight to the moon, or maybe a crypto that was going up. You know, I wouldn't be buying at like a 10% retracement or like a 20% retracement, right? Because you're susceptible for it to crash down and you can lose a lot of money and you're really not buying at a discount. I like to only buy things whenever it's 50% discounted or more. And the same goes for selling as well. I like to enter on a discount pricing whenever it's 50% or below. So this price level really wasn't appealing to me because it was at the 50%, and I would like to buy below that. And, the level that it's currently at right now is also not appealing to me because we're in a dead session right now. We're in Asian session. We're not in New York. So this really wouldn't be a time that I would look to buy right now. That's why this zone that I have marked correlates with the 88.6. And for all you fib traders, I would definitely look to take more entries at the 88.6. But other than that, I just like to take anything below the 50%. Now, if you guys want more like an intraday analysis, since this is about 200 pips away, yeah, we are about, I would say about 200 pips away from 180 to 200 pips away from this level. So there can be one last leg down before we start receiving buying. Now, let's say the market just drops down to here. I would not continue selling the DXY or buying EU, buying GU, none of that. I would just be looking to start taking it in the other direction. So let's say we get a retracement tonight or maybe even tomorrow morning. I'll be looking to take something like this, right? Maybe this candle right here. Sometimes even this candle right here. Hold on. Now, my reasoning behind that is because I prefer 4-hour candles. So this right here is actually a lot more appealing to me. Whenever a 1-hour candle correlates with a 4-hour candle, that means we have more confirmation on that candle because there's a higher time frame that's correlating with it. So just being honest, guys, this would be a nice setup. Let's say you were to take buys on EU, buys on GU from these levels right here to take it down. That would be something that I'm definitely looking at. But let's say it reaches down to here before it reaches there. I would definitely invalidate this setup and then just start looking in the opposite direction. So let's say we're looking at GU. Go ahead and delete this. Now, if we're looking at GU, there are a couple areas you could buy it at. And on the call on Sunday, I was actually mentioning how we wanted this trend line liquidity to be taken out. And funny thing that we did, right? A lot of people were looking to sell right here, but just me being honest, I didn't really like to sell. This buy, Wall Street Ray actually called this out on our last call. So shout out to you on Sunday. If you were on the Profit Society call, Wall Street, he called out a buy from this level right here. And it's actually up about 341 pips right now. So if you were on the Sunday call and you took that trade, drop a $sign in the chat. Right? Drop a $sign in the chat because you definitely caught a bag on that. And that correlated with my analysis that we wanted this trend line liquidity to be taken out. But other than that, guys, pretty much two levels that I'm looking at here for GU is maybe something like this. If we can get a bounce right here, maybe tomorrow, I could probably be looking to take that. But let's say we go down a little bit lower. I actually would be looking down to this level. Maybe we can fill in some imbalance right here. Right, there are two levels that I have for buying on GU. Taking something with a low risk, high reward on this candle, and taking something with a low risk, high reward on this candle. Right. So my first attempt would be going at this candle right here. But this is definitely a lot more higher, and it doesn't really meet my discount confirmation. So there's one confirmation that's not on the table. But on the other hand, we would still take this as a low risk, high reward setup. And guess what? If you get stopped out, you should only be stopped out about 50% of 1%, which is 0.5%. Sometimes at the max 1%. you shouldn't be risking more than 1% per given setup. Now, again, like my boy Ray said, you can take 1,000,000 losses and then take one big W, and you can win back all of your losses plus make profit. So let's say we do get stopped out on this initial entry and we take this lower imbalance entry below the 50%, and we take it with a risk to reward of something like this. As you guys see, that's a 1 to 10 risk to reward. So that 1% that you lost, you made it back plus an extra 9% on this trade. So this is definitely like a great outcome of a risk to reward that I'll be looking for on GU. But let's say we don't reach any of those levels and we just keep going straight up. I'd be looking to sell up here. That's more of like the buys are more of like a, how can I say it? It's more like a intraday scalp. It's more like a buy to sell, right? It's more like a counter trend trade. These buys are really counter trend. The overall trend is bearish, right? So if you want a great swing trade, right? If you want a trade that you can hold for weeks, even months at a time, I'm going to give you guys this setup on GU to sell at this level right here. Right, again, the buys are more counter trend, more buy to sell, but this sell candle right here is a lot more appealing because we took out liquidity on that sell. It's an amazing candle that I feel like the banks are hiding a lot of orders in, and it correlates with our DXY analysis. So I would be taking something like this. It is slightly more of a bigger stop. You can actually go down to the lower time frame and actually reduce the stop by going down to the 1 hour and putting out this candle. So let's say you would want to reduce the stop. I would actually play something like this, like a 25 pip stop loss. And just when we get down to here, where we're currently at, it's a 1 to 11. I would definitely be taking majority of my profits here, maybe even here. Oh, my bad. Maybe even here, I would be taking majority of my profits, 1 to 8. But I would definitely be holding a rider on this trade. I'll definitely be holding 10%, 20% of this trade for the majority of this move, which is about 1 to 50, right? So that's a great risk to reward here. And I'll definitely not hold the entire position because it doesn't have to come down this low, but I would definitely be holding a small portion of my position for this entire swing move. But yeah, that's GU, guys. On EU, pretty much the same thing, but it's just a little bit of a different level. So again, I'm still looking for this long-term sell up on this level. So, you know, a risk to reward on a trade idea like that, I'll be playing this 1 hour candle right here. So our swing move would look something like this. The risk to reward is definitely a little bit more smaller in EU. I could actually go down to the 1 hour and refine this a lot more too. I can go down to here, put my entry a little bit more higher, and get like a 20 pip stop out of this. And targeting just the level that we were at this morning is a 1 to 13. And the next lows would be a 1 to 27, 1 to 30, right? So I'll definitely be looking at that sell setup on EU. But if you want the buy to sell, because obviously that sell level is definitely about 180, 200 pips away, pretty much the same as the DXY. This is the inverse of the DXY, but again, it correlates with our DXY analysis. You know, I do have 2 levels that I am looking at to buy EU. it would be somewhere right here or the level I have marked. Let me just delete some lines, make it a lot more clear for you guys. Okay, cool. So let's say you would like to catch the buy up to this sell level that I have marked. I'm gonna delete this box, make it a lot more cleaner. So the sell levels are marked with these two lines right here. These two sell levels. But let's say you would like to catch the buy up to those levels and you don't want to wait 200 pips before you can start selling. This candle right here is very appealing. This order block. And this imbalance is very appealing as well. This nice little inefficiency right here. So similar position here on EU. I would be taking, similar position like GU. I would be taking this position here with somewhat of a 15 pip stop, targeting the highs, targeting this imbalance and our next entry point for the sell. That would be a potential 1 to 15 trade idea just by playing this candle right here. But let's say we get stopped out, we would lose only about 0.5% or 1%. And I would still be looking to take buys on EU, maybe even somewhere down here with the risk to reward of 1 to 8. So, obviously we're preferring this higher level up here, but if we do get down to this lower level, the buys are still valid and I would still take them. And then we can ride it up all the way up to here. And then we can start selling it back down, right? Do be cautious that this week is NFP week, right? If we go on the Forex factory and we were to go all the way to, I don't know why it's on September. Here we go. Let's say we were to go all the way to Friday. Understand, tomorrow there is USD news. So, be aware of that. We have some non-farm employment change. It can do something in the market, but the major news event that we're looking at is NFP on Friday. So just be aware that, markets tend to move out of the ordinary on big weeks like NFP week. So, at the end of the day, don't be scared to take ideas. Don't not enter. Just enter with a lowered risk. And I promise you guys will learn a lot. But with that being said, that's EU. Last one I'll get into is USD CAD. This morning we had some great sells. Even on the Sunday call, I called these two candles right here. I said it's either going to buy up from this candle or it's going to sell down from this candle. And especially since we were bearish on the DXY, I was preferring the sells. But, what's crazy is, I didn't actually end up getting into this trade because I don't trade London session. But for any of you London traders that might have caught this sell right here, shout out to you guys because I called out this candle on the Sunday call and it played perfectly. Let's say you would have took this trade and you were awake during London session. Shout out to you guys. You would have caught a beautiful 1 to 10 risk to reward. Actually, like 1 to 12 if you count the entire move. But like a 1 to 10, 1 to 12, just by catching that sell during London. I personally wasn't awake to even trade this thing, so I personally was out. But again, let's talk about these higher time frames. Once I saw a daily bearish engulfing like this, the whole bearish candle engulfed the previous bullish candle. I pretty much was bearish this morning on USD CAD because following a daily bearish engulfing, we are pretty much almost guaranteed to get another bearish day, especially since the full day was a bearish engulfing like that. We were pretty much guaranteed to get another bearish day today on USD CAD. So going down to the 4-hour, I would say this would have been the entry right here. This previous 4-hour candle. Sometimes previous buy candles, when the momentum shifts and the trend shifts to the downside, these previous buy candles become great support levels, great resistance levels, great just levels that you can start taking in the other direction. And that's exactly what happened here. The market for New York session, pretty much when it was 8 o'clock, it was like right here. And then we kind of wicked up a bit, kind of played around in this level. And then we started going down once the 9:30 session opened. If you would have went down to like something like the 5-minute or maybe even the 1 minute, on the 5-minute, this was actually clean. The orange line right here represents the 9:30 New York Stock Exchange open. So once 9:30 hit, I always look for entries between 8 and 9:30 a New York session, because time is actually very, very important with price. So once 9:30 New York Stock Exchange hit, a lot of volatility came in. We played off of this candle right here. We completely wicked it at 9:30 and then just started dropping straight down. So pretty much that was your trade right there. Now you could have also went down to like a 1 minute, just knowing that the last previous day was a bearish engulfing. I pretty much just would have been bearish on this thing overall. But let's say you went down to a 1 minute. You were looking at structure on the 1 minute. We had a higher low, higher high, higher low. Then we got a higher high. And then this right here broke structure. This little move right here, it broke this higher low. So now any sells between here and here would have been valid. And this right here was the most appealing candle because it had something on the 5-minute and also recognized time and price. Once price broke structure on the 1 minute, that was a great sign to sell. And also this 9:30 stock exchange open was also a great time to sell. So you guys recognize how time and price always ends to line up. Structure broke right before the 9:30 open, then it retested right at the 9:30 open. So price met with this order block right here and time met at the same time. So whenever time and price meet, that's a great confirmation that you can start getting into your desired trade. So that's why USD CAD did what it had to do today. And I am looking for re-entries on this thing, possibly to come back and mitigate this candle again, right? Or maybe even this candle, right? There's two candles of preference that I am looking at. Maybe something right here. But my preferred entry would be something like this. We can come back and mitigate out of that supply candle. I'll be very happy taking this trade on USD CAD. Maybe something like this. This also correlates with UJ. So if you're looking at UJ sells, I agree with that as well. And we can catch something maybe like this. So we can start retracing before we go back up. So with that being said, guys, honestly, I want you guys to connect with our Profit Society group on social media. I'm going to drop this link in the chat. I would also appreciate if any moderators could start spamming this link all over the place. This is all of our social media platforms. I'm very, very big on social media. I love social media. Social media is pretty much how I built all of my businesses, guys. From starting at 15 years old, I had pretty much no friends, no family members that was supporting what it is that I had going on. I remember having like 1,000 followers on Instagram when I first started this, right? I think maybe even like 800, right? Something crazy. And I was in high school, I was taking classes, I was doing what I had to do. But, at the end of the day, I didn't really have the influence that I truly wanted. Shout out to my brother from another mother, Mr. Banks, Emery Holmes. He mentored me, and he really personally mentored me on social media, guys. So at the end of the day, I built pretty much everything, all the network that I have, all my students, shout out to all my students in here. Shout out to Hustle Academy. Pretty much, guys, everything that I have, I've built off of social media. A lot of people say, man, I'm tired. I can't build my social media. I'm not good. Like, this is the biggest excuse I get. I'm not good at taking pictures. I'm not good at Instagram. I'm not a social media type of person. That's more of an excuse at the end of the day. So pretty much, guys, I want you guys to follow us on social media. Don't make excuses. I dropped the link in the chat. The first link right here is to join the Private Society waitlist. Go ahead and do that if you haven't done it yet. Join the waitlist, or you probably won't be accepted into our official launch. We have a Private Society YouTube, which you guys are watching from right now. Feel free to go ahead and subscribe. Feel free to go ahead and tap in, subscribe, put on the post notifications so you guys can be on all of our sessions. We do have a Telegram, right? If you guys aren't in our Telegram, go ahead and join our Telegram. We literally just started this like last week. We have 260 people in there. Let's get that thing to 400 by the end of the night. All of you guys click on the link that I'm dropping in the chat. Join the Telegram. We also have Instagram. So feel free to connect with us on Instagram. We literally just started this, I would say about a month ago. We're already at 466 followers. Let's get it to 1,000 followers by the end of the night. Definitely connect with us. Definitely follow us on all platforms. We also have TikTok, right? If you guys are on TikTok, let me see if I can pull that up. We have our TikTok is profitsociety.co. We do post on TikTok. If you guys are fellow TikTokers. I'm going to love my home planet. All right, guys. But if you guys are fellow TikTokers, definitely tap in with us on TikTok. I'm going to show you guys our TikTok. It's profitsociety.co. We literally just started it. Show love on the TikTok, man. Especially if you're a TikToker. You guys already know how the algorithm works. If you guys show us some love, we'll definitely go crazy and show off for you guys. And if you guys, hold on. Well, it's not loading, but you guys get the point. It's the same as our Instagram, profitsociety.co. Here it is. Show us some love on TikTok. And if you guys want to tap in with me personally, my Instagram is just plain Kyle Hustles, just like that. I also do go live on YouTube sometimes. My boy Abel really pushes me to go live on YouTube, but I have the link in my bio for all you guys that want to tap in. And it's pretty much just Kyle Hustles as well. I'm Kyle Hustles on pretty much everything. But, with that being said, tap in with us on social media, work with us, stay tuned in, because we really got some big things in the work. So with that being said, honestly, I do want to pass it off to the next individual. Hopefully you're ready, bro. It's the man, the myth, the legend, Mr. Skaggs. I mean, guys, I cannot say enough good things about this guy. Just being honest, I saw this guy when I first started trading, right? And, when I first started trading, like, I didn't really know too much. I was pretty much just like learning about trading. I didn't know anything about trading. And, at the end of the day, this guy was talking about Bitcoin, right? He was like, yo, Bitcoin's going to the moon. This thing is going to go crazy. And this was back when Bitcoin was like $2,000, $3,000. I mean, at that point, when you first got started trading and people are telling you that some coin is going to the moon and it's at $2,000 and you've never heard about it before in your life, I was kind of just like, yo, you're going crazy right now, bro. Like, I don't even know if I should believe you right now. And then as the time went by, Bitcoin started going up and whatnot. And I was like, man, like, this guy was right. Then I started buying. I would say maybe until like it started hitting like 8,000, right? And I was like, bro, that's crazy, man. And that's when I started like really following this guy. And he was talking about Wyckoff, smart money. He was talking about all these different concepts that we all trade now pretty much before even anybody was trading it, right? A lot of people weren't trading Wyckoff. A lot of people weren't even trading smart money. A lot of people weren't even really doing that back in the day. But I can tell you guys this, this guy is definitely, a multi earner in this space. I'll just leave it at that. He's a multi earner, in just trading, not even like network marketing or anything like that. We're just trading. So you guys could definitely tell that he's a great trader. He definitely pulls profits out of the market. And if you're somebody that's been struggling with that, he's somebody that's going to help you with that. So I'm definitely very honored to be working alongside this individual. Definitely really excited to, learn from this guy and earn with this guy. So with that being said, my brother Skaggs, I want you to go ahead and take it away, bro. Blow their minds. I need everybody to drop a 777 in the chat. Spam the chat for my brother from another mother, Mr. Skaggs, bro. Take it away.
All right, all right, all right. Yo, let me know if you guys could hear me. Let me get some threes in the chat. Let me know if y'all could hear me. Drop some threes for Kyle. Let me know that you guys could hear me. What's going on, fam? What's going on? What's going on? Listen, I know we've been on here, this stream been going for about 2 hours, so I'm gonna keep this short, sweet, straight to the point. Let me just bring up the chat on my side, family, so I know that you guys could hear me. 1 second, 1 second, 1 second. Keep dropping them threes. Let me know. Let me know. I just want to bring up chat over here. Cool, cool, cool. So listen, family, I'm gonna be real. We went over a lot of charts. Ray and Kyle, Abel, they all dropped some fire knowledge on you guys. I mean, they pretty much went over a lot of what's already happening in the market, right? They went over a lot of what to expect out of US dollar pairs. And I'm not really gonna bore you guys with more charts. We can maybe take a look at one if you guys really, really want to, but I wanted to give you guys just a little bit of extra knowledge, a little bit of extra tips to kind of go into your trading week, your month, and the rest of the year with. So what I want to ask you guys real quick, I want to start with a question, right? I want to start with a question. I want to ask you guys, right? What is the main mover of markets? Right? What is the main mover of markets, right? What is the driving factor of price, right? I want to know what you guys think is the main mover of markets, right? So drop that in the chat for me. Let me know what you guys think. I am looking for a specific answer. It'll be interesting to see what we get in the chat, right? What is the main mover of markets? What are most traders, institutions, and whatnot going off of, right? So let me know what you guys believe it is. I'm sure we'll get a whole bunch of different answers here. And let me just make sure I have the chat up. But what do you guys think is the driving factor? I mean, buyers and sellers, yeah, like you have to have buyers and sellers to have a market, right? But let's see what we got for a main mover of market. Somebody said buyers and sellers, momentum. Momentum is the result of movement in the market. It's a contributing factor, but it is not the main mover. Somebody said fundamentals. Somebody said sentiment. We got micro, macro economics. We got supply and demand. That's not a bad answer either. That's more about the logic of the market, though. People say fundamentals. Some people say liquidity. We got volume, interest rates. It's another pretty good answer. The banks, the banks are, again, they're people that execute. But what do the banks go off of, man? Right? The banks, I mean, they're not just blindly pushing buy and sell, right? What are they mainly taking into account? Let's see what else we have. Currency value, not a bad answer. Economic events, not a bad answer. I'm looking for one word, man. Where are my students at, man? What do you guys know we like to play? What do we like to play? Come on. I want somebody to get it. I don't want to give it to you. Somebody said, hi, how often do you do your live streams? This live stream specifically happens Tuesday, Wednesday, Thursdays at 10 p.m. Eastern Standard Time. And then in terms of Profit Society sessions, we also do Tuesday, Wednesday, Thursday for New York live trading sessions. Central banks set the rates. That's also not a bad answer. That is a mover. Don't get me wrong. Don't get me wrong, guys. Interest rates, fundamental sentiment. Those are all very, very, very good answers, right? News. There we go. See, I knew my students would chime in eventually, right? Shout out to Jude. Shout out to Morteza, right? Rumors, right? Rumors, family, rumors. Right. There is sentiment and fundamentals are movers of the market. But before you get to those news releases, right, those events, before that actually hits the market, there are rumors that are driving the market. So what I wanted to kind of go over with you guys again is, the relation between price, rumors, and the actual news events. Because I'm gonna be real with you guys, you fundamental traders, that's great, right? But our job as a trader is not to be with the market, right? Our job is not to be with the market. It's not to be up to date with the market, right? What we actually want to do is we actually want to be ahead of the market, right? We actually want to be 1 step, 2 steps ahead of the market. I mean, that's the whole point of analysis, right? when you're doing analysis and you're looking at previous price action and you're looking at areas of interest and POI, and you're looking at things like supply and demand, you're looking at these news events, where you're building up analysis, which is taking in all future and current events and, again, predicting something that is yet to come, right? So every trader, more or less, is trying to be ahead of the market, right? When you're buying something, you're expecting it to go up in the future. Hopefully you're not buying it just because it's going up in the moments, but because you have that future expectation for price to go up. So I want to just, again, I want to bring this to people's awareness, because I feel like a lot of people get lost in current fundamentals when the market is mostly always moving off of future fundamentals, right? Things that are coming. Speculation, again, that's the game we play with analysis, with forecasting, right? That is the game that we play. So I wanted to give you guys just a little bit of a visual representation of how price reacts. This is like I used to have a diagram. I got to make a more current one. But when we talk about like the main mover of the market, right? So we have price here, right? This is just Euro USD. We're just going to use this chart as an example here. But right, this is price, right? And price is moving along, and that's great and all, right? Actually, let's just move back over here real quick, right? Let's just say this is a standard price cycle, right? Price moves down, price moves up, and that's all wonderful. Now, some people think that the relation between news and price action is like this, right? Where as news comes out, price action, trends along with it, right? That they're this synonymous thing, that they're always working together. They go hand in hand. And I want to just challenge that thinking a little bit with you guys, right? I want to just make you guys aware of why you always want to be looking ahead of the market and not looking at current fundamental events, right? So like we have NFP on Friday, right? I want you guys to honestly answer. Do you think that banks and institutions are waiting until that result drops at 8:30? Right? Do you guys think they're waiting for that result to drop at 8:30? Or do you think they're doing a ton of research, in the week beforehand, or even the previous week before the news, on what they might expect NFP to do, right? Do you guys really think the bank is sitting there, or JP Morgan sitting there and waiting, and they're like, oh man, like we don't know what this is going to come out as? No, man, they got tons of people, right, that are doing research into data, reports, the economy, and they're leading this through what they call research. Research and rumor, that's the same thing, right? Because it's both dealing in this speculation of a result, right? So if this is price here in our yellow, right, rumors are typically leading, right? Rumors are typically going to be ahead of price, right? So they're very closely related. I'm going to just change this color so you guys can understand that this is different, right? So we have price action in yellow and the rumors in red, right? So as rumors develop, right, as they're saying, okay, we expect NFP to be good, we expect this to be positive, right? Price will follow that because those traders are going to act off those rumors. They're going to act off that research, right? They're going to take those things into account. Where news is actually going to lag a little bit behind, right? Because again, the institutions, the traders are going to play this stuff earlier on, right? So news is actually lagging behind price action and the speculation. So what I really want you guys to kind of get insider trading, somebody said. I mean, I wouldn't call it insider trading. I would call it I mean, there is a lot of insider trading that happens, right? Shout out to Nancy Pelosi, the world's greatest insider trader. You're right. She's named nobody better than Nancy Pelosi at insider trading. That's just a fact. Right? She does it publicly all the time. It's kind of a meme in the space, we all know. Right? So I want you guys to understand that price is more closely related with rumors than it is with the actual fundamentals. And if we just take a look at some of these charts, right? Like let's just go to the DXY, right? Abel kind of broke some of this down at the beginning of the call, right? With why we're seeing a little bit of a fade off in the DXY. And the reason being is because, again, there is rumors, right, circulating that the central banks might either take a quick little pause, in increasing their interest rates, right? They might slow down a little bit. We know the UN is asking them to do this. We see it on the charts, right? This is all rumor-based trading. This pullback, based off of current economic data that's out there, doesn't really coincide with what's happening, right? Because the last thing that happened was we increased interest rates. This should be still building on, strength in the US dollar. But we're seeing these pullbacks in preparation for things that traders are looking forward to in the future. So again, price that's currently happening, right? What's currently happening in the market is an indication of the rumors that people are expecting in the future, and not necessarily an accurate representation of what's actually going on in the market. So I want you guys to kind of get into the habits of, when you're looking at economic calendars and you're sitting there and you're looking at it and you're like, oh, well, tomorrow's Wednesday, so let me find out, what's going to happen tomorrow. And then let me go into the market and then play off that news, right? That's not necessarily always going to be the best thing. Again, this is why when we do our Sunday calls, we go over the economic calendar, and that's the main focus, because we want to be ahead of the market. We want to know what might be coming into the market. What are the rumors? What are the speculations? What are the events that we're looking forward to? And how can we play into that earlier into the week? So I want you guys to get into the habit of looking ahead. I want you guys to not be up to date with the market, but I want you to be a few steps ahead of that. We can also see this in various things. I mean, you can go look at the NASDAQ. The NASDAQ's acting the same way, right? With some relief. I have a lot of analysis on my chart. I do apologize, guys. But you guys can see the same thing, right? Indices pumping off the idea that, NFP rumors, and then also off the back that the Fed, again, may pause. It's not my belief that they will. I think people are going to be crushed in November when the Fed actually comes out and says, we're not going to take the advice of the United Nations, and we were going to continue on our rate hike path. I think a lot of the speculation is wrong, but nonetheless, it is speculation that's happening for stuff that's going to happen in the future. So I wanted to kind of just talk about this. If this makes sense to you guys, drop a 3 in the chat, right? If you guys are going to start looking at rumors, because I want you guys to understand, again, as a trader, you're dealing in the art of speculation. You're dealing in the art of analysis, right? Everything you do is with the idea that something in the future is going to be different. So when you guys are looking at news events, like a lot of you are looking at NZD USD, right? And you were looking at this move. I mean, let's take a look at this move, right? Let's take a look at what happened here. I mean, all week long, right? Again, what was the rumor all week long? We knew we had interest rates, right? We knew we had interest rates. We knew that New Zealand was more than likely going to hike at their 50 basis point level. And we never got this pullback, which is just annoying. And what happened all week long? It plays into that rumor, into that bias. By the time the news hits and it comes out, right, all this is doing, grabbing liquidity, exiting that zone. If you were playing that news and you're like, oh man, they hiked rates, time to buy, what happened? You got trapped in the market. Whereas if you were leading into that event all night and you were looking at, again, some of the stuff that was happening in here, which for us is a little reaccumulation cycle, you could have, again, in anticipation of the news playing ahead of the market, you could have taken advantage of the fact that when the rates did come out, that it did spike up, right? But playing it at the results, right, when it came out was not the best idea. So I want you guys to get into the habit, again, of not looking at news only on releases. You need to start leading yourself into the market. You need to start being 1 step ahead, 2 steps ahead of the market. And more times than not, again, you're going to have instances where you're a little early, right? That's like my biggest weakness, because I'm always trying to be a week or 2 weeks ahead of the market. I'm always trying to anticipate not what we're doing this week, but what the most likely thing that we're going to be doing next week and how I can position myself this week. That does end up with me being a little bit early, but I would rather be early to the game, taking small losses and then catching that move, rather than being in the middle of that move and getting stuck inside of liquidity zones, much like people that were playing this rate were. So that's just my little bit of rant on that. Again, I want you guys to understand that the market does not run off of current news. By the time you read a headline on something, by the time you see a result hit your economic calendar, the market is already looking past that, right? When NFP strikes at 8:30, yeah, you'll get some volume. You'll get an injection of that because, again, that is like what we call like a trigger event, right? There will be, you know, that final little bit of a reaction. And in some cases, when a shock number comes out, again, you will have chances to fade or vastly continue in the same direction. But they're playing that ahead of time. So if you're playing news, these people that play NFP right at 8:30, they're playing a dangerous game, right? At that point, institutions are no longer playing that result again, unless it's like a shock number, and a shock number being again something that's wildly different than expectations. A good example of a shock would be the rates that came out of AU, right? We talked about how AU's expected rate increase was 50 basis points, right? And the shock is that they actually came out and they cut that expectation. So this would be like an example of a shock. And then at that point, you know, you're dealing in a little bit of a different realm. So yeah, hopefully that makes sense to you guys. I see a lot of threes in the chat. Like I said, I don't want to take up too much time. So I'm going to do maybe one chart for you guys. And with that, we're going to go over oil because I've seen a few people ask for oil. And oil actually has some pretty important news coming tomorrow. All right. So who knows what the oil news is tomorrow? If you guys know what the oil news is tomorrow, drop it in the chat for the people that don't know. It is something that happens every few months. I'm not talking about the normal weekly news that comes out. We're not talking about inventories, right? But what is our bonus points to those that know the rumor about tomorrow as well on oil? I'll give you guys about 20, 30 seconds to get those answers in. I know the stream's a little bit delayed here. And while you guys do that, I'm going to just mark up some stuff on oil while you guys kind of drop the news event. And if anybody knows the rumors of tomorrow, I'll go over that as well. So let me just put all the fancy terms here that you guys use and the terms that I use. And for those of you guys who are on Sunday's call, we talked about oil potentially coming up into some of these areas here. And we'll discuss what is next on the docket here. So let's go to the 2 hour. Nobody knows what the news is tomorrow. Oh, don't disappoint me, family. Don't disappoint me. You guys can just go check the calendar. It's not that hard. No, none of y'all know? Oh man, y'all slacking. I got no oil traders on the call, huh? We got no oil traders on the call. There we go, Tammy. Oil stocks changed. No, that's the weekly news, G Money. So every week, yeah, there's inventory numbers and stuff like that, right? We're talking very specifically about the OPEC meeting. Now, do you guys know the rumor around the OPEC meeting? All right, so tomorrow, the OPEC meeting, which are just a lot of oil producing countries. They're basically just a part of a little alliance of sorts, and they kind of make decisions together, although they all still do their own thing. And the rumors around it is potential supply cuts, right? And this was asked by Russia. So Russia actually asked all OPEC producing countries to cut their oil production by 1 million barrels per day, right? This is the rumor for tomorrow. So OPEC will meet, right? OPEC will meet and they will discuss, they'll discuss a lot of things, but the main rumor surrounding oil tomorrow is going to be whether or not they follow through with Russia's request to decrease production by upwards of 1 million barrels per day. So, right, who knows what happens if they cut supply, right? So it's basic economics, right? If you cut supply, what happens? Demand, if it remains the same, you may get a little bit of an uptick. So keeping this in mind tomorrow, right, that we have this OPEC meeting, we can expect some volume to come into the market. You can expect some headlines around this. And we want to kind of put this into our, main bias. Russia is asking them to do supply cuts. a lot of the countries inside of OPEC have actually pretty good relations with Russia as well. So they are likely, right? They are likely to take into account, Russia's request here. That doesn't mean every country will, but overall, a lot of the OPEC plus countries do have a good relationship with Russia. So with that in mind, I am expecting oil to potentially spike to the upside tomorrow. Now, I'm not really interested in trading it around here. I'll be honest with you. I mean, tomorrow, if we grab some liquidity on the lower time frames, I might be interested in taking the trade. But generally speaking, I'm more interested in what's going to happen after this news comes out, and seeing how the market responds to these cuts, right? Because just because some countries cut production does not mean that every country will, and some countries may step in and actually increase their production to kind of offset it and take advantage of that. So oil scarcity, yep, like somebody said, oil scarcity may come in. Now, 1 million barrels per day from OPEC, it's not a drastic cut, but it is a significant enough cut to give us a potential spike up. Now, if we look at the chart, there's a few things that I'm looking at, right? Obviously, we're still playing into this, area of imbalance here. We talked about this the other day and on Sunday's call, right? Some people call this an order block. And then we have this liquidity pocket, and a liquidity pocket for me is just the difference between a climax high and the lower high, or the difference between the climax low and the higher low, right? So this would be your liquidity pocket on a bullish or bearish scenario. And you guys can see, again, this is your climax high here, right? If we zoom out, I mean, again, you have some other structure, but in terms of what we have right here, this would be our main liquidity pocket. So I think what we do get tomorrow is I do think some of these headlines come in where we do get potential supply cuts from OPEC. I think the market will brush it off after the fact, and I think NFP will bring in some potential selling. So all I'm really looking for on oil tomorrow is, again, I am looking for a spike up, fill out some of this imbalance and inefficiency. I'm expecting this candle here, this CB, this continuation block, to get wiped. And then I'm going to try to go short, again, willing off the reaction here. I do want to see it, react off this level. There's some live action I want to see up here. I'm not going to just set a limit. That's not how I trade. I trade in a live market environment. So I do want to see very specific things from this once we enter the liquidity pocket. But I will be looking at reasons to be taking low risk. And again, low risk because I'm finding the momentum. I'm only going to be risking about 0.25, maybe 0.5% on this trade at most. But I'll be looking to go short somewhere around 89.25, maybe even a little bit more down towards 89 or below it if the reaction is pretty strong off this liquidity pocket. I won't be risking much past the wick, right? If even at all to the wick. So this will be like pretty much my max risk. Anything past this liquidity pocket, and I'll look to be, out of the market. I might give a few points just for spread and other reasons. And then I'm going to look for this to kind of come down and fill some of these other inefficiencies and imbalances, because this has had a pretty good week, right? I'll be real with you guys. This has had a pretty good week. We gapped up again off some of the speculations here. This was asked by Russia last week, right? I think this was asked by Russia. I think it was late Friday. So that's kind of what contributed to your gap up and then your run all week. Again, because people are playing the rumor that OPEC will respond with the supply cuts asked by Russia, right? So this was hand in hand with what I was just talking about, right? Oil's had a strong week, again, because this has been the expectation all week long. So I'm going to look to fade it after these headlines, after the news, again, up inside of this liquidity pocket. I probably won't look for too much out of this trade. I'll probably very simply look for it to come back down into some of these areas, probably down towards like 83. I don't know if I'll specifically hold it over the weekend. We'll have to kind of see how it reacts and how it plays. But based off of the week that we've had and my expectations, I think that a lot of this move is overpricing in this news. I don't think a 1 million barrel per day supply cut from OPEC warrants, what was a 6%, possibly upwards of a 10% increase in oil. Is it bullish news for oil? Yeah, absolutely. These supply cuts also come with a little bit of like fine print. So just because they agree to these supply cuts doesn't necessarily mean like the next day they're just like, all right, that's it. We're gonna instantly cut production. Usually it's like a slow process. So if they do agree to a 1 million barrel per day cut, it might take them, 2, 3, 4, 5 weeks before they actually fully start implementing those cuts. So you'll see a reaction off of the, headlines, but it'll take a little bit for those supply and demand metrics to kick in. So yeah, this is my setup on oil. I know people commonly ask for this. And yeah, you guys can let me know what you think. We probably will be, again, we'll be live tomorrow. The OPEC news is at what time? It's usually tentative because it is a meeting. So it's not like they're going to come out. It's going to be random headlines all day. I'm just going to real quick see what time they have it on the calendar though. Keeping in mind, it is an overseas meeting. So let's see real quick. When do they have this? Is this not tomorrow? I thought it was tomorrow. Oh, okay, hold on. The calendar is already switched to today. Yeah, so see, it says 6 a.m. It says 6 a.m. We'll probably start getting headlines around 7:30, 8 o'clock, 8:30, as New York session begins to kind of open up. We'll begin to see those headlines. So during tomorrow's live trading session inside of the Profit Society community, we'll probably be discussing this move. We'll probably be looking at the result of this move. But again, this is my setup. Again, looking to go short, potentially above the 89.25 area. Looking to risk no more than like 90.50, and again targeting down to 83, the 83.50 area as we kind of head into NFP and those other US releases later in the week. That's all I really have, family. Listen, we've been on here for 2.5 hours, so again, I'm not going to bore you guys with a bunch of charts. You guys have the path, you guys have the analysis, you have our bias. And with that being said, family, the only other thing I have for you guys is the same thing Kyle was just discussing. Make sure you guys get on that wait list for the official Profit Society launch. For those of you guys that want a beta spot, this is your last chance. Take a photo on Instagram of you being on this call. Tag us on Instagram at profitsociety.co. I will personally DM you a link to go sign up to our beta for free. You guys could test out the platform. You guys could hop on our live trading calls in the morning, right? You guys could trade with us live during New York session. Absolutely no charge. But all you have to do, again, take a photo, upload it to Instagram stories, tag us in it, let me know you guys were here, and I will personally invite you guys into that beta. So with that being said, family, please enjoy the rest of your night. Abel, I'm gonna pass it back to you if you are here, if you have any final words. If not, I appreciate you all, and we will see you guys on the next stream.
Yeah, now family, I don't got much to say neither, family. I appreciate every single one of you guys for rocking, especially all you guys that stayed on the entire time. Hopefully you guys were able to get massive value. And just like Skaggs says, we'll be back tomorrow live in our platform in the Profit Society. So make sure to go ahead and be a part of the wait list, or do what he said, take a screenshot, get actually early access to the platform, and I take advantage of it. But family, I appreciate y'all, I love y'all, and we'll be back tomorrow, same time, same place again. Let's get it.